they really get, to a place where they're ripe, we're going to be right there to capitalize. I have no doubt in my mind about that. Right? No doubt about that. All right, so there we go. So let's see here. Yep, we're live on the tube. So can we come in over there? They'll have access to rock and roll there. All right, so that we'll get right into it, guys. So as you guys saw with the title, we try to have a diverse, I guess, way to kind of look at the market and come at the market. Why? Because, there's so many different facets to this stuff, right? There's a lot of different lanes that you can travel down. There's a lot of different angles to approach it. If you're more of a visual learner, you're more audio based. If you're more, hand, script value, you write down a lot, your strategies, your trades, of course, you take that stuff to memory the same way if you were hearing it, right? Some people remember better when they write their plans into action too, right? So, so we utilize every aspect of that to become very proficient, right? And above all, we are in the business where, as I always have said and like to say, find your own niche or niche, but steal from everybody. Why wouldn't you, right? This is the only industry that pays you to copy off someone else's paper. The only thing is that you got to make sure that paper that you're copying off is what? Right and exact, or at least has a great probability of success, right? We'll say that because there's no exact science to this stuff, right? So that's great, right? And you can become literally a millionaire if you copy off someone's paper. If it's the right person's paper, right? And you know how to mix in discipline and a lot of little things like that, you can become a millionaire, right? It's weird when you think about it that way, but it's exactly how this stuff works, right? Just somebody that became a millionaire today in the stock market for the first time, right? Just weird as it sounds, right? Millionaires are created all the time. Like, well, first thing somebody probably would say, well, the market's coming down. How they became a millionaire when the market's coming down? Yeah, they also trade against the market too. This thing called short selling, right? This thing called put buys, right? You're putting a put on the market. Like, this is the top. I'm putting, you don't know the stock market. It's time for you to come off them gains a little bit, right? So as you see on the screen here, this is our, after hour session here with the SPY here. We got roughly about 29 minutes for the bell completely closed for the cash session, if you will, even though it's after hours, it's more of the futures, but extension of the futures, but this is it. And so a lot has gone on the last, few days or so since we last met and spoke and were candid about, our dealings with the market beyond our live streams throughout the day, of course, on a more constructive value, what we do in the training sessions. And, I think for the most part, and I hate to keep sounding like a square record here, broken record in this regard, but, we've been pretty well at putting a decisive, trend on this market, right? Some of it may have been a little, obscure for others, and some, like, man, that's just a little too much. I don't think, man, these people ain't gonna let that happen. Well, here we are today, right? We are here today. We are gathered here today, right, to witness, the slaughterhouse of what we call the stock market. And what has transpired since then to be here today is just no more than understanding, risk appetite, the data, the economic headwinds that we have before us. And, outside of that, any kind of one-off events that the feds may throw or, or the administration may throw out there, right? But nothing that, again, we wasn't already kind of thinking about or planning for, right? So that's where we're at today. So again, just giving the S&P 500 a little, I say, put some respect on the SPY name, right? Put some respect on the SPY name. Well, if I do that, then let's do that. Let's put some respect on the SPY names. That means for us to put respect on the SPY name, right? The SP 500, we have to say, granted, given this area here, right? The latest highs, right, if you will, down to this latest floor, right? Just that little window right there alone. Just mind you, we're talking about this little window right here, right? Roughly from 365 up towards, 383 and change, right? We got as high as 383 and change yesterday, right? So you're talking roughly, almost a whole, let's say almost a whole 20 plus points, right? right? Couldn't make this stuff up, right? So, we'll just say for the sake of just even numbers, we'll say a whole 20-point window. We're not even call this a challenge. This is more of a window, right? Who's that peeking through your window? Pow. Nobody now, because I can assure you what we've witnessed was, what we call some egregious, what they call peak to trough trading, right? Y'all know I love peak to trough trading. I love being able to kind of put markets in some kind of form of a box, kill box, whatever, and play, off these so-called these levels, right? These levels of interest, right? So in this latest, saga of markets pull back, right? We, literally saw a one-off event. Of course, we had FOMC, which we know this binary event was going to cause a lot of volatility, right? We're not, new to this in that regard. We plan for the volatility, especially if you're going to be trading, it's going to be very risky, right? Very risky, right? Some would say this goes as far as use the other value to it, right? Risque, right? The real classic front. It was a very risque type of marketplace, right? But for the most part, granted, if we even go back in from a historical value, in this case, just April 6th, the last time we had our last major, it wasn't April 6th, it was the May one, the May meeting. April did it too. It was May and April, but definitely we saw where in the May meeting, Jerome Powell came out. Of course, he spoke, we got the numbers first, right? Market was trying to digest the extent of that. It's like, okay, we price it in this whole idea that Wall Street is always trying to price in, degradation of its value is like ludicrous to me. Why? Because they're literally, sitting there at their own eulogy, like they're inside the casket, or before they get ready to go in the casket, they're at their own eulogy in advance, right? They're planning for their own funeral, right? I'm gonna say Ricky Smiley style. They planning for their own funeral. And then lo and behold, when they get the data that this is the date that, the animal getting ready to come down, all of a sudden they say, yeah, we were just, really, really prepared and planning for it. And, but typically it doesn't necessarily go that way, right? We need to, know the time of the hour when the Grand Reaper comes, right? But nonetheless, the market did exactly what I kind of figured, right? I kind of put it out there in advance, literally like a day or two in advance. I wrote, to some messages to some people that was asking, what was my, I guess, assessment of what the market was going to do. I was like, typically given the scenario like we're dealing with now, I think initially we're going to get, the green to red, the green back to red move, right? Which is typical, which we saw what happened in April and what happened in May. Clear enough, here we go, right? Right. We had an initial little rise here. We had an initial pullback, right? Then we went super green because, that was that, value where we were, I think, 370, was it 378-ish, somewhere around there of the previous day close, all right? And then we pull back. Now, we didn't pull back and close red, mind you, right? But it was close enough where, we saw that weakness a little bit. And then the market kind of played the role of just eking higher into the futures market, right? But typically, when the markets felt like they got what they wanted, in this case, the 75 basis point rate hike. Now, there was already a scenario like we dealt with the CPI data, right? They leaked in advance the idea that the Feds were going to put out a 75 basis point. Now, if y'all been noticing the market lately, they've been doing a whole lot of leaking of private and sensitive information. Notice that? Like this stuff is not even, it's not even hidden anymore at this point. There's so much in plain sight. I don't know if this is a part of the Fed's, mandate to orchestrate a soft landing by leaking sensitive government information out to the general, I guess, if you will, it's our information anyway, but to the public ahead of time. But that's been happening a lot in Washington lately. Notice that? So yeah, about that, again, we're talking about credibility, right? Right. The Federal Reserve's credibility is on the line. Janet Yellen's credibility is on the line. The White House administration as a whole is on the line, and yet no one, again, really gets in trouble for none of this stuff. Not insider trading, not leaking information ahead of time, be it the BLS, be it Federal Reserve website, news, in terms of interest rate hikes, this, that, third. And it's supposed to be a scenario just like a company. They go into a quiet period, about a week or two in advance before they get a chance to release their FOMC numbers, the book, right? But how this stuff gets leaked all of a sudden, right? It can't be the idea that everybody just so, so speculative to the point where they just kind of forcing someone to just give them a nod or something to say, well, yeah, so we got to, the cue that the Fed's going to raise rates of this, that, and the third, and this is this amount, right? That's what the future funds rate is for, right? You go to that website, you go track the ideal of what the market's pricing in for. And that's typically not just people, behind the screen coming up with some kind of guesstimation. It is based upon what? Interest rates. It is based upon what the bond market is signaling, right? That's how that stuff is really factored, right? So yeah, the fact that this stuff just keeps getting leaked is in itself is problematic. But anyway, we're traders, right? But we are also students of the game too. We want to know what those things mean and the importance of them, right? So again, you got numbers that peaked, right? Or in this case, leaked. And so we had the market kind of trending that previous day to the upside, right? Just, it was just like, they were just in preparation for it. Literally, the after hour sessions of, that previous day was just like, okay, yeah, we're going to play ball, right? Tuesday, essentially, right? Okay, if y'all wanted to play that game again, we're going to front run, the Feds. But even though y'all say y'all ready for 75 basis point, that's what the analysts are saying. That's what the Wall Street talking heads are saying. That's what so-called some of these traders who are thinking they're really prepared for this are saying. Well, like anything, it's all good until the numbers actually come out. And then you start hearing more about the detail of, the devil's in the detail kind of reality, right? When Jerome Powell gets to speak, right? Which he's, again, I guess they probably say, well, you need not even say anything else going forward because, they depend on him so much to carry them and they hang everything on his every beck and call scenario, whatever. It's like at this point, like seriously, the guy's telling you outright, I'm not with you right now. I can't be for you right now because, I'm getting pressure, right? I get, people beating down my back on the administration that I need to stop, catering to Wall Street and Wall Street only, even though I know I didn't overstate my welcome and crush the growth of our value for everybody, right? I made it bad for everybody, but for the most part, if you was able to own assets and grow money during the time when I was just printing, then you should be comfortable now, right? You shouldn't be complaining right now. You should be sitting good. But that ain't the case for a lot of people because why? Greed begets greed. And sometimes people don't know how to back away. They don't know how to walk away, right? They don't know how to not be a gluttonous scenario. And the level of risk that they still had on or available was more than needed when you was already up, a whole bag of plus, right? So now people are starting to eat a little bit of crow because they just overstate their welcome. So kind of speaking to that a little bit, Dave, when we're talking about, being able to secure or not necessarily secure, but learning how to scout, neutral voices or publication, whatever you need to help you with your conviction and your resolve as a trader is very important. Why? Because information is power. And if you don't know how to discern it, then you could be a victim of it, right? Especially in equity markets, right? It ain't hard for somebody to come into a room or a place and say, hey, I got this stock, guys. I think this stock's going to go to the moon. Everybody's already hungry and optimistic as it is anyway, right? Some people be willing to put on that level of risk without any form of research about that particular stock, company, whatever. They'll just take that scenario as face value and then just jump right out there. Worst thing you can do, right? Even the things I say, don't take nothing I say in terms of a stock value to be gospel. Do your own research. I'm always going to be the first one to tell you, do your own due diligence above all things, right? Never follow someone down a rabbit hole unless you already plan for what that rabbit hole may be, right? That's just reality things, right? You are responsible for your own decision making in this. So it will be the same when it comes to how you value and view information. Where do you go to get it? How do you, again, interpret it, based upon what you've learned thus far to carry you, right? So again, this comes along with the territory. It comes along with the territory, right? So again, using that same conversation topic, we're thinking about the market, right? Here's the market here. Look at this. Now let's back it out a little bit, right? Just using a small chart for now, right? Y'all know I like to do this stuff, make it squint your eye just a little bit, right? Now, but seriously, using the old chart here, right? This value of, again, what you see right here clearly out the beginning, out the gate, as one would say. You see, let me get over here and get my pen up here. Sorry about that. You see a marketplace that's, really, let me take this off, add this back here. All right, let's do a line on it. Yeah, right here. Right, you see a marketplace that pretty much gave you a proverbial this kind of U-shape, fry pan bottom, if you will, whatever, level here. And, we tried to break above it course, we had these levels planned in a more bigger perspective, and it failed. Now, all this right here was just, underneath that. All right, let me come over here, change my pin back. Everything along this kind of U-shaped bottom here was just, building up the momentum for the inevitable Fed that they may just come out and sing a really good song that Wall Street, can really rest on, right? Anything is better than, not being able to plan for the inevitable and say, well, at least we got that bad data out the way, right? But you can't say that. Why? Because this level of lingering data that's a problem with the equity markets is that it's not going to provide an economic window where things are peachy and rosy, and we could just act like these things don't exist. We're talking about inflation, record inflation, like literally record inflation, right? Bigger than what it really is. We know that to be true anyway. So it's even beyond record level inflation, right? But they hiding it. They're doing the best job as they can to hide it. It ain't really working out for them too well. But nonetheless, it's a stay of reprieve. As I like to say, it's a stay of execution. So yeah, we're still trained to trade patterns, trends. We see a big U-shaped bottom here, right? Clearly, you can just see literally how they just played off this little pivot, played off those pivots. They crest at a trough, right? There's your trough, right? There's your trough inside that moment, if nothing else, right? And then you ran right back to old resistance, right? Or peak point, right? Old resistance or peak point. And then you failed. Now they did all that pumping indiscriminately yesterday on that news that was, again, just saying, hey, here's another nail for the coffin of the overly perma bullish kind of traders, right? If you still late to take some money off the table, and we done told you take some profit a long time ago when we was telling you guys we're gonna try to orchestrate a soft landing, but that means hint, hint, hey, get ready to start taking profit, right? You guys are already up 70%, 80%, 30%, 100+%, and y'all still refuse to take profit after we didn't print all this money and gave it to you as a freebie? Like, are y'all kidding me? That's literally what Jerome Powell's probably saying when he goes, when he in the private of his home, every day, like, man, these people just don't get it, huh? They are just greedy, right? I guess that's probably what he's saying, but he love it too because he's a trader, right? That's why he done the damage he's done thus far, because he's yet to realize he was yet to realize the extent of all that printing that excess of money like that when he should have been being more concise with it, right? Besides these little stale talking points he kept putting out. But nonetheless, this is the market we got. So the market played right into that curve, that U-shaped bottom curve there, right? Made his move, and it's weird and so because if you even look at it from a place where it came down and hit this area here, the market did the same thing. I know my line ain't straight. I'm just drawing now. It came down and hit that same area even when the market pulled back on the initial news of the Federal Reserve, letting go 75 basis point downrange. And, QT officially started quantitative tightening, right? So there was a lot of things that he said within his message concerning the extent of how much of these 75 bips that they're going to continually try to do or not do. That was one of the reasons why the market rallied too, because he said this is somewhat of a one and done of the 75 rate hike, saga. Wall Street used that and said, oh, okay, so we're only get one and done on the 75 bips and we're going back to 50. Oh, this is something to rally on because we had it priced in already, maybe 2 or 3 75 rate hikes. Like, this is the lunacy of these people. Like, it's like, do you want, all right, do you want death by, the guillotine, or do you want death by guillotine with flame attached to the blade when it come down on top of your neck, right? I know that's a weird way to use that analogy, but you get my point. That's what they delineate between. Like, both of them is still equal in death. But Wall Street said, all right, we'll take the one that doesn't have the fire. All right, yeah, good luck, guys, good luck. All right, but anyway, technically we saw the market, all it did was just pull back and hit that same level of support that we saw from a previous pullback earlier. And they played off that beautifully because the algos came right in and saved the market there. After I saw that kind of starting to play out there, I said, oh, here we go. Let me just go ahead and, swing me a call, right? Swing me a call, right? Or 2 at that point. I was thinking buy 2, but I only bought 1. And, lo and behold, we rallied all the way back because we saw this in May. When the market felt like they got what they exactly wanted, it rallied off of it, and they used Jerome Powell just for that day to speak to the algos to calm everybody in the market, to give that one moment to say, hey, here's your chance to exit the market a little higher than you were supposed to. When technically we're supposed to be tanking right now, but I'm allow you to get out of the market up around the peak, right? In this case, it was around about what, 383, 384 and change off this massive move, right? Mind you guys, we bounced all the way from 372 and change, literally, all the way back up to 383, 384ish. The amount of money that was made in that little moment alone. Just keep in mind, guys, this is under, inside of, 2:30 all the way to the bell of 4 o'clock. Now, this one bounce here came pretty early. It came right around what 2:30-ish plus whatever, and we bottomed out, then we ran all the way back up to around about 381 and change, whatever. Like that happened in a matter of what, 5 minutes or so, if that. Like crazy volatility, right? If you're a really good trader, man, you talking about people that made a lot of money yesterday, just trading the volatility in the turns in the market when the channel broke for higher or broke lower, and they able to read that, a ton of money was made. Like a day trader's, dream, right? Of course, if I, blow it up a little bit, you can see exactly what I'm talking about, right? Day trader's dream there, right? All that movement straight up and down in a linear fashion, right? But hey, again, if you're not prepared for that, I would say don't jump out there, try to be a part of that, that life, right? It's just not worth it, right? It's not worth it if you're not really rated to be trading the market at that level of volatility.
Yeah.
Right? But nonetheless, this is a great moment to learn from, right? This is a great moment to kind of say, well, this is why we do these scouting sessions. We use these moments to kind of help us, add to our regimen or our ability to assess sentiment of the markets, how traders react during certain news reels like this, and then what we should plan for going forward, right? What do we plan for going forward? So chances are, again, given the fact that we made this kind of same move that literally happened during May and April with the FOMC, it was just pretty much all but understood that, guys, if you didn't take profit on, if you bought calls on that dip down to 372 and you didn't take profit when the market gave you a free 10 or 12 point move in under 30, 40 minutes, you didn't take profit on that? Like, are you serious? Like, are you you can't be that, greedy, because if you convince yourself at that point, nothing that the Fed said, was, or did was bad enough for the markets, or to the degree where, I should say this, to the degree where it did something to kind of really stop the real problem that's before us that got the markets weak anyway. If what they did was, that great enough where it stopped all that stuff, then I guarantee we would have went a lot higher, right? We would have a lot higher. All we did ran back to some old resistance point or supply zone, and then the market said, here, I'm letting y'all off here, right? Y'all should have got let off way down here, but I'm gonna let y'all off the bus stop way up here. Right? You get a chance to get, let off really at your doorstep at your house, right? You can't get any better than that. And people still overlooked that or looked at that as if, it's not enough, right? It's not enough, right? Because for the most part, more people still, not convinced that this market, again, when I back it out a little further, you see where I'm going with this. A lot of people are not convinced that, the data is not as bad as people make it to be. But I'm like, how could you make that assessment? And you're, supposed to be, skilled at being able to turn information over and really parse the straws and see what's what, right? As they say, the numbers don't lie, right? Especially the chart perspective here. The more I back this chart out, the more it gets, very sinister, right? It gets it becomes like a thing like this is getting sinister, like. Right. So we know, out the gate here, going back to the levels of, resistance up around this point here, roughly around 416 when the market lost this latest, struggle or fight, right. To try to make a new high and at least get above 420, right. Which we was able to short this area here really, really effectively. We've lost all that energy there, lost 406, we lost 400, and everything from that point on, especially for 400 on down, was just like, okay, yeah, look out below, right? Look out below. All right, we literally ran from 400 all the way down to 372 and what it considered to be a short order time frame. You're talking a matter of 1, 2, 3, 4 days, right? 4 days, like 3.5 days to be exact. 3.5 days, we went from 400 to 372. How many people are planning for that, right? maybe not 372, but at least, you know, I guess more downside value when we've already been here before, because as we say, look to the left to determine the value of what? The potential value of the future, right? Well, if we go back and look to the left, guess what? No secret that we already came down to tap 380. So the fact that we broke 400, which was a massive level of support underneath the market, right? After we, of course, lost 406 and all that stuff. But when we lost 400, that was really what, you know, an ominous sign that, okay, we're getting ready to go back and test what the potential of the low. That's how a lot of the algos maybe start thinking. A lot of you guys will start thinking that way. Y'all was very smart. You know, we were planning for this stuff a little bit. And lo and behold, we did that. And now it becomes a game of, okay, is this the proverbial double bottom? Once we break, you know, and come down and test that old previous low, or are we going to break below it? Why? Because if you've been following the market of late, every time we made a, you know, a notable bounce at a point or a pivot, went to a place of prominent test of a natural good resistance, failed. When we roll back over, we didn't play the game of what? We get a chance to double bottom here and what? And bounce and trying to stabilize and go higher. I would say at least 8 out of the last 10 times this happened, we all broke and went what? Lower and made what they call what? Dead cat bounce type lows. We blew through the previous, you know, low and went lower. Well, that's the signal of what we say, a signal of a bear market, right? Understanding bear markets are very, you know, peculiar type of what? You know, market values, right? Market sentiments, right? You got to be able to, you know, reconcile that inside your head. This is not like the normal stuff you probably been used to when, you know, the market was still somewhat humming because, you know, there was a lot of good news out there that we recovering and people going. It's not that kind of marketplace now. This is like degradation on your economic, you know, value, personally and collectively, right? Personally and collectively. Inflation is, you know, is like a Molotov cocktail. Someone sling that in your window unexpectedly while you watching your favorite game or whatever, and all you hear window crashing, you know, and a glass, you know, gin bottle comes flying. You ain't prepared for that, right? And so this is essentially what's happening with the stock market now. Someone that Molotov cocktail the entire stock market, but we saw this stuff coming, right? Because we know that they was out there selling a whole lot of wolf tickets that they had everything in control, and they did not, right? We saw, you know, of course, you know, how inflation got to the place where it's at now by the actions of the administration and the Feds. And now it's like, okay, well, I guess I'm about to live with this and accept this. But some people are still yet to accept it. They're still holding on to hope that somehow, some way, all this stuff is just going to what? Magically up and go away tomorrow. Someone, please explain to me how that's going to happen. Anybody, please explain that, right? Like, convince me that we're in the all clear. I ask that question a lot sometimes when we come live, because I want to check the temperature of you guys as well. All right, I want y'all to check my temperature too. Like, let me see what this brother talking about. I think it's going to be different, right? I love those kind of conversations, right? Because you need to, you know, be able to kind of, you know, see where you at, you know, in your view of it, right? Of your stance on terms of the market right now, or the economy as a whole, right? So, you know, again, let's back it out a little further, right? Let's go a little further. Hold up, I forgot I'm on the daily chart, so I'm gonna go back on so far. There we go. Now I didn't mean to go that far back, but we're there though. But we're good enough. So again, that's that. Now we're in that window where I want to take you all the way back to. Hold up, where's the? Let's go. Hold up, let's go here. That's the one. Is this the one? Yep, this one. All right, we'll back it up to this window here now. I'm doing it systematically for a reason. This was the latest window where, again, when we had that latest, you know, the planning for, again, going back to, again, the month of May, right? What do we get in the month of May? Right, this is on the daily chart here. The month of May gave us a market, you know, that came into the month of May, as you see here, up above what, 420 plus, right? So if ever was a marketplace that was ready to say, hey, you know, we making rally, build a good base up around this 420 area, right? Maybe as low as, you know, where we came from at 410, at least, you know, if we could stay neutral there above at least what, 416, 417, we could build new base and we could what, go and test at least what, the old highs, at least stay up in this range towards this and the old, you know, short-term high of 460, and we'll just play off that area, right? We'll play off that area and maybe we can fight through all this inflation data, fight through that issue with supply chain and Russia and all that, and we'll just build our new base there. We may not be at all-time high, but we definitely won't be in what on the lows where we just came from around about 410, and we'll be all what? It'll be all gravy, baby, right? That reality. Well, guess what happened? The month of May saw the market doing what? Coming in on the upswing, and literally fourth day in, right? On the fourth day of markets, Jay Powell did to them, constant hawkish rhetoric, bringing the market, down, whatever, right? Y'all get it. 4 days in, here we go, right? Here we go, right? Here we go. Same kind of pattern that we're dealing with, that we just dealt with on the last week. Y'all notice that? Y'all see this little U-shaped bottom I got right here that I drew, just recently on the most present market? Do this not look like the same thing we just sat there and looked at from today's market? Mind you, this is May into June, right? This looks like the same pattern that I just showed y'all on the daily chart within the last week. Can y'all see that there? I'm asking y'all now. Do y'all actually see?
Oh yeah, I can definitely see it.
Y'all see what I'm looking at right here? This is the same, and it's almost
definitely.
It's to the T, ain't it? Hey,
yes, sir.
And the slight spike up in the middle to make a W. That was in today's too.
That double bottom value right there, right? That's that fool's go, right? It actually tripled all that too, all across it. But it is, like you said, it's very demonstrative in terms of how to make that W bottom there, right? Or that W peak in between, right? I mean, this stuff is like, man, it's like, is D-Algo this proficient? It makes you wonder, right? Is this stuff this proficient? Or are we just that much on our job, right? Are we on our job that much? I would say we're on our job, right? We're on our job because as we know, market's going to do what market's going to do, right? They're going to do what they're going to do, right? Hate, like, love it, or indifferent to it. The market's going to do what it's going to do, right? And a lot of this is just them trying to buy time. Now, ordinarily, when we say, the trend is your friend, you trade within the confined value of what the trend is obviously presenting to you or signaling to you, then yeah, it's okay to be ahead of that slightly, not too much, but just enough to stay within inside of the trend, right? We talking about 4D chess moves, right? And this kind of marketplace is, you really got to increase your 4D chess move strategies, right? I'm using the SK style now, strategies, not strategies, right? You got to get muddy with this thing, get dirty with it, right? Because a lot of people are getting churned up right now within their premium values of the options, within their direction of buys and buying common equity shares, whatever they're trying to put on in terms of risk. Look, it's been choppy, it's been messy, it's been, waiver, it's just been a whole mess, right? A whole hot mess. But again, this thing is looking so proficient all the way through. It's lower. Y'all know where I'm going with this, right? I got to ask the question all the time, as I always do. How do you determine a downtrend? I'm asking for a friend. Anybody, go. How do you determine a downtrend? Anybody?
Lower lows and lower highs. Or lower highs and lower lows.
Specifically, over Rich, how do you determine the exactness of a downtrend? Which one out of those diagrams you gave? Which one specifically?
Can you hear me clearly?
Yeah. Go ahead. Which one do we use specifically?
You can look at the one to the left.
No, my bad. Bar. Not this chart that I have here, but
okay.
For my mental diagram, which value within the downtrend do we use more than any to determine the downtrend? You said
you can use the volume.
Lower lows, right?
Yeah, but you can also look at the volume.
Right. Well, I'm just saying those are the ancillary things, but within a downtrend itself, on a technical level, what do we look at above all things to determine the downtrend? What value of the downtrend do we assess? If you get what I'm going with that.
Yeah.
You just said it earlier.
Maybe I'm overthinking.
Lower highs.
No, it's all right. No, it's all right. Now, you're on point. You're on point. You're a technician. Well, I don't expect nothing less than that. I'm dealing with a technician. No, but no, I think somebody just said, who's that? Over Brandon? You said what? What was it?
Lower highs.
Lower highs. Right? That's a t-shirt. Right. Y'all know we've been beating that drum so long, bro. It's like it should be already in our heads. That lower high, boy, that thing been tested and tested and tested. And it's been proven what? Dang near right in his almost every time, right? Almost every time, right? That lower high gives the markets a lot of trouble. And if you've been looking at this market the same way I have, and we all have been doing, we've been able to nail a lot of the majority of those what? Those lower highs. If they tell me I'm in a bear market, then guess what I'm looking for? Lower highs. That's all I care about. If they tell me that we're in an uptrend and everything gravy, baby, we ride through what? Gravy Valley.
Higher lows.
Wheels, I'm looking for them higher lows, baby. Because what do higher lows denote? Higher lows denote what?
Well, usually a stair step pattern.
Exactly. That stair step pattern, affectionately known as what? Support.
Support,
right?
Yeah.
You got aggregate buying, right? At or around certain levels, and they building that what? They building the ledge, right? To what? Bounce to the next one, right? So it's the inverse when you come into the downside. Again, I would say that's a simple rule that one could use or follow to help their resolve when they're trying to what? Establish what? Trend bias. Now, duration is another part of that, right? Meaning how much time you're giving it to work out or play out. If you add around the peak, well, it ain't hard to kind of determine that too, because we're just going back to what? To previous areas of what? Of what? Price action that shows whether or not we at those levels of what? Peak or not. And sometimes, the market will overshoot those areas. Now, we know how this stuff works. Sometimes they go over $1, $2, right? Sometimes you can be a little real too early if you're trying to be 100% on point. But for the most part, if you got duration on that, guess what's going to happen? Most times, if everything is setting up the way it is, and you've been good at reading the energy market, you're going to get that what? That follow through you looking forward to the downside. Or you'll get that push to the upside in the same breath of we what? In an uptrend. Make sense? Y'all with me there? All right. You guys follow along here? Because again, for what I've been witnessing and been seeing, for the most part, again, we've been spot on with this stuff. Right? I've been saying, somebody tell me where we have it. I'm honest. I'm being 100% straightforward here. Show us where we haven't been right and really kind of putting good levels on this market. Yeah, and this is going back last year, but even more so now, so that we're in the thick of all this inflation, all this stuff that we've been talking about, going ham about for a long time. We seeing it playing out now, and it's just like, bro, yeah, this is kind of, this is kind of surreal, right? This is surreal. Our level's been, they ain't a spot on. And the more you look at this stuff for what it is, like it's like, we're doing right here, you guys are seeing exactly how this market is giving you a proficient look at what it's doing, as it trek to the downside. The lower highs, the U-shaped bottoms, try to, to test over resistance, failing, go lower. Right? It's like, and like you said a little bit earlier, over Rich, the volume as well, right? Just kind of looking at, the red from the green inside of this chart right here alone, and seeing when there was a moment where, we was getting ready to get that bullish swing where you had that consecutive value of what? Green volume bars coming in, the buying coming in. Okay, here they go with the upswing, right? They're finna try to push it back towards, resistance, whatever. And then when they get there, matter if they chop around at that area, fail, and then they roll, right? Of course, looking at this on the data chart, look where we chopped out for the longest at around that point up there before we failed. Now, big money was like, they just kept loading their puts at around this area, right? Probably right up around here. They smart with it, right? They just loading puts up there, loading them for the inevitable. A lot of it, everybody else, retail was like, man, I'm trying to buy some calls here, bro. I think we finna break out. But Jerome Powell got out back. They on that level still. They on that body dip and just let it rip energy still. They hadn't learned yet, right? 100% right. Basic pattern structure, right? See, you guys are getting it, man. You guys get it. See, this was like not even, this wasn't even a hard read to be exact. Like this latest 416 chop, it wasn't a hard read. Literally, third day in plus, I'm buying puts, right? On the back end of this day, right, I'm buying puts. giving myself some duration, meaning giving myself some time, because the inevitable rollover is coming. Why? Because we're going into June, and the month of June is Armageddon for the stock market. Why? Because we know unequivocally we're going to get a minimum of 50 basis points. No matter how they try to say they're pricing in a whole lot of whatever. Every time they say they're pricing in, what happened? It ended up going lower. Y'all notice that? Like, who's telling people that just because they say it's priced in, the market still can't go lower? Like, we've seen that happen repetitively, and people still is trying to buck against that. Like, I don't get it. Again, convince me how the economic data has gotten better, where you can say we're in all clear. If we just want to plug our ears and say it don't matter, and we can play, play the Jim Cramer role and just, a constant bull market all the time, like, bruh. Like, this stuff is not even, But anyway, as you see again, you back the chart out, it looks identical to the short-term day trade value of it as well. Right? You asked a question today for duration. Meaning, like, how much time within?
Yeah. No, I was going to say, so for the duration, I know certain stocks that you have to play for duration or the time for that move to actually hit. But for like the SPY, you normally do like a 2-day, or would you do a week if you had the actual premium?
Good question. And for me, sometimes I try to mirror it around the events, right? Because y'all know that a lot of times, like, if I have a really good conviction on a stock for earning, I'll play it that week in advance before it comes around. It comes into play, right? Because we got a better premium closing out that week when all the premium get wiped out from that previous expiration day. They kind of somewhat hit a small reset button. You can get it at a much more cheaper price, right? We still got to get through when the futures open up in that next Monday, whatever that price action may lead, but still you was able to get it, at its most optimal level. Of course, if you were able to get it at the right time when it was either peaking or cresting, or troughing, on a support level, and then you caught it, and then you caught that buying into the report, right? You'll have access to the opportunity to close out in advance or ride it even into the print itself, right? Gotcha. You got more command. Now, when it comes to the SPY, the data that we use is kind of like an earnings play almost every other day. Why? Because we got economic counts that the market got to bob and weave through. Some of those data points are more pertinent and important than others, right? We talked about that the other day. Crude oil inventory, they got 3-star importance, right? PPI, CPI, 3-star importance, right? New York Empire State numbers, I think they sit around 2 or 3-star. Of course, we know jobless claims, stuff like that, right? They're important readouts, right? FOMC meetings, 3-star, right? Very important event, right? Those are somewhat the same things a person would do on the Forex side, right? The economic counters for them says a lot about the currency values, right? Rate hikes and this, that, and the third. So it mirrors up against that timeline and sequentially what's going on with the marketplace at that point too, in terms of where we are structurally. Make sense?
Yeah.
Ultimately, if you're gonna do a 0 days expiration, you're coming in doing 100% 1,000% day trade, right? The 0 day, this day gonna be very volatile because of this, why, right? This, that, and the third. Case in point, Wednesday, they had the FOMC on a Wednesday. If you notice, the latest ones were on Thursday. I think the last one was on Thursday. So it was outside of a contract expiration moment. You see what I'm saying? So it was like, okay, this is an expiration date. So the market maker was up against the wall. They got all that premium to potential payout if the market take a turn for either the worse or the better. And whoever on the other side of that premium, whoever had the most premium out there on the put to call ratio, they got to either kill that side and respect the other, or et cetera, or keep the market neutral as possible. If you notice how the market traded within that first 15, 20 minutes when the news came out with the FOMC numbers, 75 bips, it was just like what we said, right? I literally said, we're going to be green, then we're going to go red, and then we're going to probably go back green, and then we may close back red. I mean, it literally played literally almost like that to the T until, up until Jerome Powell speaking. Again, we didn't close as low as I would have hoped, but we still kind of played back into that downtrend a little bit, slightly, and then the market ramped up after hours, right? They just, this little dirt after hours. But that was a ABC moment, right? Always be closing, right? That was a 0 day expiration opportunity, right? You could have put on that risk, but inside that window of 2 p.m. up until 3:30, whatever, right? Of course, if you had nerves still to do it, and trade that volatility. Again, we had an 11 to 12 point swing in under like 15 minutes. Right? That's crazy. Think about that. And imagine you had spy calls or puts on either direction at that moment.
Right.
Bro, you already know it's like, bro, look, you straight on the plane. You close that trade, you got the plane already waiting, warmed up. And the bottle of ice. Like, bro, like, don't even worry about it. You're right here paid for it. Thank you, SPY volatility. So again, the value of the duration is really, surrounding around, again, all the little factors, price action, trend value, where we at in terms of the channel, right? Because we use a lot of channels for a reason, right? How close we are, to, place of interest, be it gaps or whatever. If we're going to play off those same levels, right, of notable resistance or whatever, it's all, orchestrated within that value. Like the plays I've been putting on lately, they've been very surgical, right? They've been hitting course, but they've been based upon, not necessarily trying to do the 0 days expiration, knowing that we got a lot of volatility, but saying, okay, if I give myself time, of course, a day or two in this regard, because if you're doing midweek, you only got a day or two unless you're going to go into the previous week. You're planning exactly as close as you possibly can to those areas, those trough points or those peak points, like we always discuss, to give yourself the best value of what risk management that you can provide for yourself. Right? Make sense? Because now you're already dealing with whatever the option markets are going to price this move or potential move out. They're saying, okay, guess what? Premium is starting to go up for the price of puts. Notice that?
Yeah.
When the premium goes up for puts in a bear market or within a weekly expiration, that means market makers are planning for some kind of form of what? Delta hedge in the way where they're going to effectively have to sell into some of that value, right? To equate to, to get the market balanced out, right? That's why they're becoming more expensive. Right. Some old school people say, well, that's a way to kind of signal where direction that they're going. That's not 100% foolproof, but it does carry weight. You know what I'm saying? And the puts were that much more expensive, right? Than the calls. Literally, if you were doing like a strangle, right? When you use that strangle pattern scenario, like, well, it cost this much for the puts in that same window, but for the call, they were a lot cheaper, man. What this about? Chances are they pricing for what? A move to the downside, right? Don't necessarily mean it's going to happen, but it's the probability it has now increased for that window, right? So case in point, right? Case in point, really quick here. Let's run over here to our good old friend, right? Barchart.com, right? Because we're going to look at the SPY in its value like right now, right? And, just in regards to, where are we, right? Where are we, right? In terms of, now this is 0 days expiration at this point. Now, granted, we don't have a market for Monday, right? Monday is a federal holiday. The market will be closed, right? It is official Juneteenth federal holiday. Markets will be closed, right? Even the futures market, bond market, all that stuff is going to be closed. If I'm not mistaken, I think it's bonds and everything too, right? But we're going to be closed. So it's like what? Do or die for the stock market, right? At least for tomorrow, right? Of course, you can still buy into the the 21st, and then they had the 22nd expiration. So you literally got a contract that's going to expire Tuesday, the day you come back, and then what? Wednesday right behind it. When you have those kind of moments, it gets really wicked, right? Because, they literally day trade at that point with options, right? It's no other way you can look at it, right? And market makers know that. But we also got a very important piece of economic data that's coming out tomorrow too, or at least not necessarily economic data, but we have an event that's going to happen in the market tomorrow. What do we have tomorrow, guys? Anybody? What do we have tomorrow?
Quad witching.
Here it is. We got witching tomorrow, right? We have a witching aspect tomorrow. That basically means what? A lot of expirations on the commodity side and futures and equities are going to expire also.
Friday.
So that means that's a lot more volatility than the market is already planning for, right? So if you look at it from that perspective, you say, well, who've had the upper hand thus far this week in the stock market? And you guys would say what? Bulls or bears? Y'all would say who? What would y'all say? The bulls or bears that control the market this week? Who would y'all say control the market thus far?
Bear.
You said bear? You got a bear from Oprah Rich. Anybody else? Anybody else? Bulls or Bears can control the market thus far this week. Anybody else?
Oh, 100% Bears.
You say Bears over Brandon got Bears.
Bears.
Bears, right? Got some more Bears, right? Four Bears now, right? Anybody got Bulls? Anybody got Bulls? Going once for the Bulls. Going once for the Bulls, right? Not Chicago Bulls, but the stock Bulls, right? Not they're not Mike Jordan, but yeah. So if that's the scenario, and let's say hypothetically, if we look at the way we can mirror that value, say, well, let's go check the put to call ratio, because that'll let you know in terms of how many of those Bears who are eating right now, whether they close their
Yeah, look at that right there.
They close their positions or not, right? I know you look at that money out there.
Man,
look right here, guys.
That's a lot of money.
Y'all see that? That's as of today, going into tomorrow. Now, mind you, because the day was not an expiration day, right? So everything that we read today is coming from what? From
Yes,
what
it
came
is.
into the market from yesterday into today, and then closing out tomorrow, right?
Mm-hmm.
Look at that put the call ratio. Now it's still somewhat close, but that's $1.4 million more, on the open interest. And we asked the question, who been eating this week more than average? Bears, right? So that means majority of those Bears got one or two decisions to make. They either got to close out for profit, or they got to
roll it over
into the next week. Now, just going into tomorrow alone, the put call ratio, is sitting at about as you see, 1.1 or 1 for 1 for 16th value of the call value, right? On the bear side, right? Of course, the market's weak, right? It's down near the lows. We're kind of playing that value of, either they're gonna get an early bounce like they did last night. They had an early bounce in the futures. Futures were ripping a little bit last night, got up to around about 200 plus. And Bears, the Bulls were celebrating. They were jumping in the street, dancing. And then guess what? It was all good just a few hours ago. Europe came out with their numbers that it was already people waiting on. ECB, hey, we got to do another rate hike. They did a special meeting the day before to kind of prime their base. People kind of looked at this like, whatever. And lo and behold, here she go, Christine Lagarde, rate hikes, right? Central bank over there, rate hikes, right? On top of what we was already signaling on our side, what we got from ours. But nonetheless, for whatever's worth, people say that would have been the reason why the market came down. We know Japan is in trouble right now too, so it's not even a factor right now. But, people are playing for that inevitable pullback because you can't make this market be great, right? if it's not great from a macro perspective. So now we get into the devil's in the detail, right? So let's do this here, right? So let's just kind of start in the put section here real quick, right? Now we know. Now it's crazy because look, somebody bought. This is crazy. This is big money people who are hedge funds. Who's buying 410 puts in the market sitting here down at what? Sitting at what? 360, 370 right now. Who's buying that? Somebody, because 4,000 contracts came in today. Crazy, ain't it? 42,000 of that was what? Open interest. Y'all see that, right? Y'all saw that, right? Mind you, this is expiring tomorrow. I want y'all to see this expire. Matter of fact, let me refresh it that way, because this is from early. I was handling business. Let's refresh that thing so that way you can make sure we precise here. All right, just want to make sure. So that's almost 4,000 contract at the 410 strike puts. The market opened up, around 380 and change. Like, who would want to buy that far in the money, deep in the money, right? To play for more downside. Think about that. And these are supposed to be expiring tomorrow. Like, that delta must be like really, it was really sweet, right? That one of Miss Millie pies, right? That Miss Millie pie. They ordered them a case of Miss Millie pies or something. I don't know. That is very interesting. Them contract cost about $4,000 a piece, $4 and change a piece, right? Well, $44, excuse me, $44 and change a piece. 42,000 over on open interest, because most of those people right there on the open interest, the 42,000 there, do y'all think them people bought those things yesterday, or what they doing exactly what Oprah Brandon was saying? They did what? They've been rolling those puts along into every what?
Yeah, that's got to be rolled over.
That's exactly what they're doing. Because once you put that money out there, you net debit that put and you buy the premium, that's your potential field position if you want to get net short, naked short the market if you exercise it. Imagine that you take profit or you exercise the SPY, after rolling over so long at 410 put. Now you got so many thousands of shares or hundreds of shares or whatever of the SPY short at 410. And now that becomes your proverbial hedge going forward until the market shows you they had enough strength to get back to a place of equilibrium. You have zero risk controlling the market from that ledge of the market at that point.
It's probably the same person who bought those at 400.
Think about that. True story. Think about that. I mean, today it gained 12 points. Think about that. That's where it closed at. Today alone is showing that it gained 12 points today alone. So that means what? You do that, 44? You do 12.34 minus 40, 43 or 44, and that'll give you where it was previously. So like you said, it was a lot cheaper before this week got going. Why? Because where were we, right? We were sitting right around. Let me go over here. I'm sorry about that. Let's go to the big charts now. To the big charts we go, right? Let's come right over. Y'all see my screen here? Trading view here.
Yeah, we can see it.
Y'all see look right here, guys. If they did this early, again, this is the daily. Now, we were very adamant about these levels, right? Yeah, right there was on the 10th, right? That's the 10th, right? We came into the market this week on the the 13th, right?
Mm.
So that means everything at 383 instead of that, whatever, right? Was that's all our weekly weekly price action. Y'all follow me here? This is all the weekly price action right here. This bubble right here. Right? Matter of fact, let me draw it so that way everybody may be watching. Like, where is he talking about, man? He just talking again. Let me see what he's talking about. That window, right? The same way we had the little bubble here. That's our weekly bubble right there, our weekly bubble. So price action inside this weekly bubble here, right? This weekly bubble here is all set in precedent of those who either rolled puts into this week or bought puts early on in the week and played into, like you might have been asking, like Oprah Brandon, duration of expiring today or expiring basically this Friday coming up. And whether or not they said, okay, well, I might have bought my expiration for Wednesday just yesterday, but guess what? I got to roll that baby into Friday, because guess what? I don't think the Fed's gonna be able to talk a good game to get them out of this mess. Right? So they needed time to let them puts continuously work for them a little bit. And keep in mind, when you go to roll a put, what do you have to accept the same strike price?
Nope.
Exactly. That means you can buy at a higher put price. Right? You just got to pay that You got to pay that that difference, whatever that difference is. You now controlling interest of a potential 100 shares of value for that next for that potential price that you're now buying as far as your strike price. So if it was a little higher, say you close it out, let's say you close it out somewhere around here, whatever, and you say, well, man, where the market kind of ripping into the close, this ain't gonna last like we're just talking about, right? That's that fool's gold pump. You say, I'm gonna get me some new puts up around 383, right? 383, or like we were just looking at for some of them contracts. You might have said, well, I want some at 390 because that's old resistance there, and I want some around 400, right? And then them big ballers we just saw there, they wanted something around They want some up there around
14.
Oh, 10, right? They way up here. Them just way up here. They want them a good perch, right? They looking, boy. Well, I'm just on the mountaintop, boy. They had a Martin Luther King moment, boy. I've been to the mountaintop. I've seen, like, bruh, them just are safe, boy. For now, they are at least, right? As they say, for now, right. But they're safe. But if they exercise anywhere up there, and the market is going to, play the game of chopping and just potentially dropping more, whatever, whew, and they still can play the game of okay, if I got, a more of conviction that we still got more potential downside. Granted, we got all that stuff, out the way, but what do the markets have that can, give it a bullish value going forward to kind of at least play back some of this carnage, right? Well, we got earnings coming up here shortly, but again, granted, all the forward guidance that's been coming out lately, when people come out, coming out there telling y'all in advance that guess what, we're finna have ugly earnings, right? They came out forewarning y'all in advance. Look, it's finna get ugly. How can Wall Street begin to convince y'all that guess what, it's all gonna be priced in? They trying to price in a million things at once. Like look, boy, they good, but they ain't that good. Think about that. They good, but they ain't that good. Like everybody's not gonna be able to participate in that kind of that hustle, right? That's basically what they're doing. They're hustling, right? They want to say, well, at least see, we already came out, told you it's gonna be bad, so you can't punish us for it now. Like, stop, right? No, y'all ain't got no, look, y'all gonna have to just hold the L's for a moment, right? But either way, again, this is just a part of you being able to, again, really go through this stuff, right? No matter where you go, again, if you're a person who, listen to certain, voices, you go to, different places to get information about the market, whatever. This stuff is important for you. Why? Because, within your ability to scour and scout the market, you got to be, always looking for, number one, things that kind of confirm your thesis, and or if there are opposing values that you want to go listen to those guys too, right? Because it may be something that you may have missed, right, within your variables, right? It's fair game. It's good. You want that. And especially when it comes to stock market, you want that. You should welcome it, right? You should welcome it, right? Because again, it's going to help your resolve in the long run. So here you go. You got people building at these levels, and then they're saying, okay, if there's more downside, then guess what? I'm ready for it. If there's a bounce coming, then guess what? I'm ready for it. Like literally, like today, I give y'all this right here, right? I'm gonna give y'all this one right here. When we came below this line here, I think we was on the live today early, right? Y'all know I was on the live. I said, if we break, at around this midpoint here, around 366, 365, right? Because I played off that area back, back when we kind of somewhat tried to rally, as I closed on put, and tried to rally back a little bit, right? So I said, you know what, going into tomorrow, because we're down literally almost like 4+%. Markets hate taking L's like that, in front of everybody, in front of company, right? Old school with it, right? You took that beating in front of company, like your little ego bruised a little bit. I said, you know what? They got, almost like a small window of opportunity. They make it what they call a small, come up for air type of rally. If they're gonna have any kind of success, granted, if the futures market in terms of the other nations, they gotta come out and put out data tomorrow or between now until tomorrow, is in a semblance where they can get like a small little bounce. But guess what? Even if they try to bounce, we already know the top or the resistance is around about 370 and change, right? 369, 370, right? That's not even up for debate, as y'all see right here. That's your top side resistance now until something changes. So being able to, say the market came down and hit like 364 and change, right? We had a low of 364.07, right? Overshot that little, 365.72, early on low, made a new low, came down to hit 364.07. If you was fortunate to say, well, okay, I'll buy a couple calls down here inside of this, 364, 360, 366 region, then I'm just playing for any kind of small or minute, snap back to the upside. Granted, if we have a rubber band effect based upon all the outflow we've seen coming in, throughout the entire day, meaning someone is going to wake up tomorrow and feel confident, knowing that we got this triple witch and whatever, they may start taking profit. If they already wasn't taking profit anyway, right? They may take a little profit early on, right? And that may cause the market to try to come back up just slightly. Now, this is all hypothetical, of course, but we're still playing probability based upon how that looks in terms of, the imbalance aspect of sellers to that of buyers, right? Are we, exhausting a lot of the sellers into the market, where you would have a few people still trying to buy for any kind of recoil back to the upside. Now, I'm not saying we finna come all the way back up towards 374, 375. They could, of course, they definitely could, right? Right. This is another neutrality line right here, around about 375 and change here. That's a neutrality line, right? Granted, you see it clear as day there. But if nothing else, let's say 370, right? We'll play small, right? We'll play small, right? We'll play within things that we can probably attempt, contempt, or I should say contempt, that we can attempt to be able to overtake based upon price action from just today alone. So let's come over here really quick. Hypothetically, let's go look at those 370 calls, right? Now, let me ask y'all before we probably go see it. Do y'all think that might be a favorable number of people sitting at 370 call buys for tomorrow? Anybody?
Yeah, I think so.
More than maybe what, 5,000 contracts minimum, possibly? Anybody?
I'll say a little bit more.
Probably a little more. What's going on, Ilba Edge in the building, right? Edge in the house. Happy to have her here finally, right?
Man,
Right?
Jay.
In the building, right? So think about that. That 370 area is now a place of interest, right? We would think so, right? Just given the fact that we can scout the market and see what's going on just from that perspective, right? So let's go see. Right? Anybody want to put a number out there before we go up there? Anybody else want to participate? Anybody? All right.
5,900.
5,000. Now, boy, you give me one of the price right number there. Oh, I'm talking about anybody else? $1. $1. At $1. Right? Let's go see. Let's go see what the 370 puts look like. Boy, them numbers are building. The closer we get to it, ain't it? Woo, boy. Look at the 380s. Look at them jokers that they bought a handful of them. That thing was 18 cents a piece. Look what they lost today. They lost $3.44 today, though. Yikes. Right? Yeah. That's those people that did not take profit yesterday. Ain't that something? They swung them calls into today and got what? Murked. Right? Murked. Right? That's why we say what? Always what? Always be closing. ABC. Let's look at the 370s here. Woo, woo, woo. You see it there. Woo, 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 Gina. Boy, y'all see that right there? Got to be careful, bro. Woo, woo. Do y'all see that right there? I know I ain't the only one to see them right there, right? Goodness. Let me highlight it, because some of y'all like, well, man, bro, we don't know what you talking about, bro. You know you on some other stuff, brother, after pouring pasta. But y'all see them right there? Boy, if that right there don't look like, hold on, let me get all this other stuff off right here. Sorry about that.
That's the honey spot right there.
Boy, you talking about some jokers sitting, boy, you want joke like joker then load the boat on you? When they load the boat, boy, I'm joking. They load the outboard, the tin can boat, boy, but look at everybody got on the boat, boy. That's 248,000 contracts that came in today for that strike price. And I can almost assure you, a lot of those were bought on the back end of the day. Right? Right around that same area we were talking about, around 365, 366, inside that 364. If they were fortunate to catch it, they wouldn't have loaded up down there. Because they're playing the rubber band effect, the snapback. It's inevitable. The market got to snap back, bro. It got to give us something, bro. It just can't, right? And they may very well be what? Be right. Now, I can assure you, it's saying that it settled at $1.74. Well, just out of transparency, I'm one of those 370 buyers, right? I'm one of them 370 buyers. But guess what? But I bought mine at around $1.20, $1.30 a piece. That's literally inside of that, what, 365 area, somewhere around the 365 area, 365, 366 areas. I can go look it up specifically, but I paid like $1.20, $1.30, somewhere around there. Granted, somewhere around there. I could be off a little bit, right? And so that means, of course, I gained a few bucks here into that potential. But all I did was I was seeing people what? Loading up at that potential what? Old resistance place. That's all it was. It's just an old, it's an old intraday resistance at this point. And people are hoping, right? I got to say that. But if the market has any kind of small retrace back to the upside tomorrow, that's a notable place that it potentially what? Can close out some of those guys. And I'm just saying that because we're going into, just like Oberrich was saying, like we're speaking about tomorrow is a quad, it's triple witching actually, but we have a triple witching moment tomorrow where all those contracts going to come under expiration. They're going to expire. Commodities, futures, equities, all that stuff expiring at the same time. And that's why I asked y'all earlier, Who's controlled the market thus far this week? Bulls or Bears? Who have more to lose if they don't close out their positions this week? Bulls or Bears? I'm asking now for a friend. Who stands to lose more if they don't close out tomorrow? Or at least roll their position into next week? Who stands to lose more? Bulls or Bears?
Bulls.
Right. Think about that though. Right. Who stands to lose more if they don't close out tomorrow in a triple witching moment? Who's been controlling the market thus far this week?
Say that again.
Who's been controlling the market thus far this week?
Bears.
Right. So that means Bears are deep in the what?
They deep in the money.
Deep in the money. So do they want to go potentially in the next week with all that profit without potentially locking it in? Or rolling positions into the following week? Y'all see where I'm going with that?
I mean, it still works. Oh, you talking about?
I mean, if you deep in the money, I think you can risk it a little bit.
You can't. Good point. But these are going to expire tomorrow too, right? So you hold it under the premise that you still are in a moment where you know tomorrow by all intents and purposes, right? Either you're gonna be what? Rolling, right? Or you're gonna be what? ABC. What the ABCs is?
Always be
closing.
Always be closing.
Right? Because tomorrow is a moment where you gotta what? You gotta send the wife to Milan, right? Turks and Caicos. You ain't good this week, right?
No.
Now, Oba, you talking about for
prices?
Right?
You got to go to San Antonio.
Right? Keep it local, right? Keep it local, right? Go out to local water hole. Right? Yeah, go ahead, old Brandon. You were saying?
No, is this for the Bulls or is this for the Bears?
This is for the Bears because the Bears are controlling the what? The tape right now.
They got to close their position out. And
you right.
Think about that. You know what I'm saying? That's the psychology aspect to this, where you say, if you guys were up like that, mind you, right? Like they put that ball yesterday into today. Yeah. Now I can tell y'all 100%. I didn't expect this level of a drop. I expected it was going to drop because we saw this happen in May, right? I'm just playing the market memory. I didn't know it was going to be at this level. We was due for this kind of drop, right? Because they've been playing around for so long. Literally, Wall Street just been really just suckering a lot of people, man.
Close on Monday, right?
Say again?
The market closed on Monday, right?
Yeah, because we got Juneteenth, right? That federal holiday. They go honor it.
You got the close. Absolutely.
Y'all see where I'm going with this now? See? So, this is still speculative, of course, but it's just based upon what? Strategically what? Trying to get in the mind of the market, seeing what's going on. If you control the tape, you deep in the money, right? The Bears are deep in the money. They want that. They don't want to give back all them gains. They can afford to lose a little bit, and they feel like they can get a little extra, but they got to be able to mindset be what? Get ready to lock in that what? That profit, right? Lock in that bag, right? So at any point, if they feel like the market makers are trying to what, pressure them and try to shake them out, because they're gonna do some stop loss raids tomorrow, man. Probably on both sides. I can almost see this ignorance, or they might just fool us all and just do a whole lot of chopping throughout the day, and let the premium, the theta itself, wreck everybody. But from where I sit, I think after giving today's, rubber band effect, now because of course Brandon and a lot of you guys, especially if y'all use their Bollinger Bands and things of that nature. Man, y'all already know what that looks like, right?
Yeah.
If you are at the low end of that, the kinetic energy alone should say, well, we got to bounce here, right? We got to get off them lows. Now, I'm just showing y'all this the same way I spoke about today on the live stream. Y'all see right here? Where are we right now in terms of the linear regression band right here?
Below the actual linear regression.
Right. We right at it. Now, guess what? No. It's weird too, because when we close tonight in the futures here, where do we close at? At around what? Around about 368 some change, right? If I'm not mistaken, right?
Right.
Somewhere around 367, maybe close to it. Close enough, right?
Yeah.
Right in that so-called window, right? We right out to my boy. When I said we right in that window, let me blow it up here because I know we squinting here a little bit. But right in that little window of opportunity here, right? We right in that opportunity window. I call it opportunity zones, right? Y'all know about them opportunity zones. We right in that opportunity zone here, right? A rough around about 368, 367, somewhere around there. So, I mean, you talking about what? A point and some change back to 370. right?
I can see that happening. Yeah.
You see, y'all see where I'm going with it?
Yeah. 375, 3750.
They plan for any snapback. Now, again, this is on the daily chart. Now it'll look a little more different, of course, if I put on the what, on the hourly, right? So let's look at that on the hourly. You guys got to see that. Now, I know y'all said, well, why y'all always talking about the SPY when y'all had these sessions? Why? Because the SPY is the ultimate broad market sentiment indicator of all assets. Most of them are correlated to the SPY, right? Mm-hmm. So it's good to look at the SPY first, and then you can go look at NVIDIA, AMD, all the other stocks that you may like and see where they at in terms of the correlation, right? But look here.
I can see it getting back to 375 at least.
Now, but I just said that earlier. I said, you know what? Now that could be a really good case if they can get back 375. But remember, I was like, I don't really see it unless they got unless they're gonna really force a lot of those bears out their position early, as y'all was kind of alluding to earlier too, right? Because they controlling the tape, right? Like they're like, bro, I can afford to give back maybe a couple points, right? That's like $200-300 or whatever possible. But they've already made a killing. Right, they've already made a killing, right? So we're talking about dropping way from at this point they've been rolling all week. Man, they rolling in the dough, But what do y'all see right there? Now here's where it get interesting. What do y'all see right here? See right here? This is the tricks of Wall Street here. What do y'all see right there? Y'all know this one of my good old fashioned I see
rounded bottom.
Boy, they trying to build it. Boy, them rounded bottles making what? Boy, look at him. Right, got him. Right. Boy,
round bottoms always something to be admired.
Boy, I'm talking about, they get you in trouble now, because y'all know what I'm saying. If you turn in that proverbial curve, look, it's going to either be blue sky breakout, right? Or in this case, it ain't gonna be like that kind of breakout. Like we just happily, it's just like, bro, we just trying to get out of the gutter right now, right? We're in the gutter right now, spinning wheels.
I'm at work. I'm not trying to laugh, and you just made me laugh with that statement, man.
My bad, bro. My bad. Hey, my bad, bro. Hey, put you under the gun a little bit, right? Man. Y'all know how we roll over here, bro. We gotta have fun doing this stuff, right? Yeah. But y'all know what it is, because y'all know we these are the pattern, right? The fry pan bottoms, J hook patterns. Again, semi cupping handles. Or just old school rounded bottoms, right? The same way we use our rounded top theory, it's the same likeness.
Right? A J hook, I like to call Africa, because shaped just like that.
Yeah, look at him. Y'all know what it is. They trying to turn it, right? When they thought the low was completely hit, even though we wicked down. But look see right here, see the meat of that candle there. Now let me take this off for 2 seconds. Look at the meat of those candles there. Where are those candles they're meeting at right here? See right here? They almost simultaneously at the same area. Y'all see that right there?
Mm-hmm.
That's pure buying and pure selling. Wicks only account for, of course, we know what they are, right? What are wicks, right? That's indecisive selling and buying, right?
Right.
That's people spoofing, not necessarily whatever, but it calls the tape. They have to take them into consideration. But the big money say, I'm looking at the meat of the candles, right? And typically when you see a red candle and then a green candle, and then a follow-up, above that. Now, even though, you look at that candle right there. Now, that's a little, what kind of candle is this right here? Right? That one there, that's that right there. That's a unique looking little candle right there, right? Right? You got a little tiny bit of wick on top of that, and you almost got like a complete T value to the wick, right? Mm-hmm. Nasty with it, right? The way they did that, right? Someone close look at it, someone like a dragonfly or whatever, right? It has a lot of different, similar to some different, but even though you said we ended there, it just, when we turned here from this candle to this candle, it was somewhat trying to symbolize the value of a short-term retraced back to somewhat of an upside, right? Again, to what extent? At least to the resistance, right? And that base case resistance is around about 369. Best case is, again, up here around 370, right? You get at 371, now you're going to be in what they call potential gap fill range, right? We got a gap fill to the bottom wick of 372.20. After that, the meat of the candle puts it at around about 374. Now y'all talk, like you're saying, open Chris. Now you're talking about that 375 area, right? That's what they call, that would be like magical case, right? Those are the moments where you just necessarily say, I don't think we're going there, but guess what? I'm ready for it if we do, right? But for the most part, if you're going to buy that kind of level of lotto, the way we close today, it's not going to cost you much. The value of the risk is not necessarily, it's not that risky because you kind of already at the somewhat short-term low. Now, granted, again, depends on how we get through the futures night. The market still compute right now and just give way to this level of support, and we out of there, right? We wake up tomorrow and we right down to this line that we already got mapped out, right? The 363, 362 range, right? We ready for it. We already ready for it either way, right? But we're talking about, when we talk about probability and risk factorization, and we talk about patterns and trends, again, that rounded bottom, boy, I'm just saying right here, I'm just saying, they trying to build it here, boy. They trying to build it, right? They're trying to build that upswing at least back towards that, 369, 370 area, nothing else. And reflective of that is going to be what? People putting in money where their mouth at. How do we determine that or assess that? We go to who?
Bar chart.
Bar chart, right? We go, I say to the charts we go, because guess what? Here lies what? Reality, right? Not people spoofing and talking a good game. People saying, no, their money is leading their charge. That's 250,000 contracts at a 370 strike price. Do you see anything close to that inside of that window? Right?
No.
At least 10 to 5 plus points away at this point. Right? That's probably the biggest tranche on this entire flow chart for tomorrow. Would y'all agree to that? Let's see. Is there any other two? Well, definitely gonna be way down in the 280s, right? But within this latest window of 370 or 362, 363 course, we see right there. Let's go out a little further, right? 375, there you go, Oprah Chris, 136,000. That's the next tranche, right? Clearly it makes sense, right? Clearly there it does.
Mm-hmm.
Then you got down here, you got 2834 here at the 385. Then somebody got feeling really good about themselves. They feeling really cavalier. 36,000. But get what? It happened today though, didn't it? Think about that. Think about the people who saw the market get above 383 yesterday, and they said, you know what? I don't believe you, market. I don't believe you. I'm gonna buy me a 360 put today, right? I'm gonna buy me for today, right? Well, for Friday, but they bought it yesterday, right? Or they bought a 370. Mind you, they bought 10 points out of the money, but they got a day to get through this whole entire day. They bought 370, 360, hey, probably even 375, but we're just saying outlandish, and it's not really outlandish, but they bought 370s. Imagine what them jokers look like today. Rolling the dough, right? Of course, they rolling the dough, right?
No, are you talking this right here? Is this wishful thinking basically? Or are they just playing for premium?
Far as what, the 389, 390, 389, 390?
Yeah.
That would be, it's teetering on both.
Okay.
But guess what? There's premium there. That means that money is accounted for. Now it's only $4, granted.
Right.
Now some of this stuff people closed out early and put it back on. Some of these people actually was in it already because they bought at when the market began to rally into the close yesterday, and the market got above 380, 381. They was like, oh, I'm buying this, bro. I'm buying some of these, bro. Right? Because they, at that point, they look, bro, we might wake up tomorrow and be above 390, bro. I was hearing that all over the place. I was like, oh boy, okay. So they start buying them 390. Now, again, those are areas of interest. Why? Because what sits at those areas that we know how the markets respond to, the closer they get back to to gap areas, the more likely you may get a chance to fill them, right? Now, again, granted, we got above 383, 380, 384 slightly. That gap here is it sits right at 389, 390. Go figure. They're playing for the gap fill. Now, if you're hedging, that's smart. Now that's further out the money, but at least say I don't want to put on all that risk. But I throw a couple of them out there just for the for the value that if Wall Street really who they say they are, right? The way that they try to make rally to the close yesterday, then they should have no problem and bringing the market off the lows and getting us back above at least back up towards that 398. Because at least on the hourly chart, guess what? We're oversold, right? We were completely oversold, right? Before we rocketed, right? A little bit there on the back end of that. So yeah, now the daily course looks different, but at least on the hourly for the traders, they're saying, okay, but if we get a bounce and get halfway back up the RSI bar and get back towards at least 50, that should put the market at least, above 386, 387, close to that 389.
And what is that, like a 15-point move?
Well, in this case, we closed yesterday. We closed at around what 383, right? We closed at what 380. It was like what was it? Excuse me, 379, right? We closed 370. We pulled back a little bit. Now we got up above 383 and change. Then we rested around about 379.19, right?
Mm-hmm.
But you say, okay, well, let's say 380 up towards what 389, right? That's what it really be, right? So that's a whole what?
What's that? $5 right? point.
We're thinking about 380 to 389, like 10 points, right?
Oh yeah.
Right. That's like a whole 10 points. Well, literally the market opened up down about what 10 plus points today, right? So it's definitely it's definitely viable, right? And it's doable in this kind of level of volatility, right?
Right.
So we know the VIX is wide open, with the dollar all over the place. It just made a U-shaped bottom, right? They thought the dollar was gonna die. It didn't. It bottomed and rallied back again today, right? So all these different factors are now playing into the grand scheme of things, and they're just saying, okay, I'm going to put on risk. Some of it is not necessarily probably within my note, my main value, how I kind of do my my risk assessment. But in this kind of marketplace, anything is possible, right? Granted, given how the market's been trading, right? Because again, who saw 10-point gap down in the morning? Now, I didn't see the 10-point gap down in the morning. I probably saw if we gap down maybe just a little bit, right? At least 3 or 4, 5 points, and we'll just kind of work that, right? At least work this candle off here, this big green candle here. If even we play all the way down to the wick, that's around about 372, right? The base case was around 374, right? From 380 to 374, that's still about 6 points. Neutrality zone. See that line right there? That's our neutrality zone. Go figure, right around it. Makes sense? So now it's like, okay, 390, 380 is doable, right? They're gonna do everything in their power to get the market off the lows.
370, yeah.
You see where I'm going with this? Because right here it's the same energy. It was us. They tried to build it, right? They tried to build it, right? They tried to build it, right? And then lo and behold, out of there, right? Right? They took it right down to this line. They took it right down to that line down there. I said, man, this is crazy. But that was a line that was already set in place because of old support, value within that. But some would say it was already the energy where the market's supposed to go anyway, right? Yesterday, they just, saved it for another day. Why? Because there were a lot of people who were buying puts into the FOMC meeting yesterday, and it was an expiration date on that Wednesday. Notice that? You see how slick they are? This is them questioning all those put buyers that were heavy in the put Wednesday for the FOMC meeting, making a little money off of it just to save it for just one extra day. And then the next day it did gave up the ghost. They slick with it, bro. These people are, again, they high levels with it. So that's why we've been saying a lot lately to a lot of people, guys, always be always be closing, right? Because you don't want to get churned up in their ability to be see, Wall Street is very skittish right now. When they're skittish, that means they're dangerous.
Right.
Right. They're looking for victims. They're looking for people to think that the market is kind of at least still fighting from a place of strength or whatever, right? It's not. Clearly it's not. But somebody want to buy the dip. Somebody want to feel comfortable that we back, excuse me, I'm gonna say that. Not back, but we're in control. And they're not. Right. Everything we've been saying for us, price action, for us, the dollar, the 10-year, the 2-year, the 5, all these, the yield inversions, already kind of signaling recession. And everybody that's on, the Main Street TV side of things are just constantly telling people that it's not this, it's not that, and they just been horribly wrong, right? Like, who are you getting your information from at this point? Hence, that's why I say, you got to learn how to get good information right now, right? As to say, title of the night, scouting neutral voices and sources to help you build convictions and / resolve as a trader or investor. Why? Because if not, you're gonna get you're gonna get mashed up out there. If you ain't ready for that level of risk, I would say don't trade it, right? Don't try to go out there and jump out there. right? But again, understanding how they've been trading this market, going back from 1 week to the next I've been watching this kind of uniform pattern been building out. These constant, U-shaped bottom values, and then they're out of there, right? Playing back to certain points of resistance, hard resistance too, and they fell, they out of there. This latest tranche obviously puts us at least one or two times of trying to at least back test it, right? I would say they may try it tomorrow. Who knows, right? We have to see how the future goes, right? But nonetheless, that risk is already on the table if you bought contract because you can't trade the after hours, right?
Mm-hmm.
But again, look at your risk factor here. You have nobody that can mess up your trade between 9 and 9:30 besides what? Asia, Europe, London. They have to be them guys, right? Japan, right? But then you still got what? From 4 a.m. to 9:30, just to see if anything that anything that can come out to save your scenario if they already kind of messed it up in the futures market session. But you put on that risk knowing that that's something that you can afford to lose. Because those same people probably deep in the money in the puts right now, they probably bought them a few calls to hedge against what?
Yeah.
All that profit they already making. See how that work?
Yeah. Just collecting premium.
Just to collect, because ain't nowhere in the world you finna have 250,000 contracts expire tomorrow at that same number of 370. And then some of that ain't people who already rolling their dough from put buys. Right? Because that's how you clean the clock of the market. Right? When we say you can play both sides and you trade like a master, a 40 chess master, that's what that is. That's risk. Right? Risk management. That's proper risk management there, guys. Proper. They bought any kind of call around 366, 365, inside 364. They already making money on them positions right now, even if they bought out of the money at the 370 strike.
Yeah.
Y'all see where I'm going with this? Is it making sense? Y'all with me here? Is it making sense, guys? Everybody, y'all with me here? Right? Roll call a little bit. Make sure, I don't want to put y'all to sleep here, but y'all no idea when we get going in, man. I'm going to look. I want y'all to, I want us to be able to revel in this stuff because it matters, right?
I was going to ask you too, when you said the duration of the actual call, is that like a percentage that you look for, or that for that potential pop up to the upside, or is it just what you want to make that day?
Well, it's a factor of that, right? Because you say to yourself, because we obviously it ain't kind of really hard to go see what the delta's looking like too, right? Because right now them deltas are going to be ugly until the market opens up, right? It settles at a certain number, but it may be something totally different come game time, right?
Right.
So hypothetically, right now, guess what the delta is on the 370 calls? It's showing 0.33, right? Basically 34 cents, right? For every dollar you get, right?
Yeah.
Now that's where it's settled at. If the market opens up, gapping up, that delta instantly has to attribute for all that extra upside premium and adjust that premium of the delta at least a minimum. Let's say it gaps up like say 2 points tomorrow, right?
Mm-hmm.
It has to count for at least I would say around about 50 or 60 on that delta, if not more, right? That's just worst case, right? They got the option calculator that can show you how to do that, assess what it would look like. But we'll just say hypothetically a minimum of around about 50 or 60 on that delta. So that means them $2 that you got on the gap up, because those contracts expire tomorrow, of course, in this regard, that's a instant round about $100. That ain't bad, right?
Right.
And say if you bought them, at $1, $20, $30, I bought mine around like $1.30. See, that's already almost near 100%, right? Just on that small little gap up, right? Or if you bought one, of course that's 50, but if you bought two, that's like 100, right? But if you bought one, that's like $60, $50-$60. So that's basically almost still 50% of that your initial premium to get into it. You see where I'm going with that?
Yeah.
And that's risk that you can say, well, you know what? If the market gonna give me that little bit early in the morning and then go through all this acting retarded, I'm just gonna go and close out early, take my little $50-$60 and I'm good. Per contract, whatever, how many you got. But even if you just bought one, that's still $50-$60 you just played back for us. A good risk assessment and saying that we kind of hit that proverbial bottom, we turned and made it somewhat of around the bottom into the close. I'll play that little level of risk for any kind of retracement snapback, because this was just a massive pullback today, right? Somebody got to be closing tomorrow, right? Somebody got to be taking profit, right? Unless these just got nerves of steel, they just gonna hold them. They gonna hold the line, bro. I'm holding it, bro. I ain't selling nothing. I'm putting pressure on them bulls today, right? And that's how you would look at that, right? I mean, that's essentially the scenario. And these are, again, expiring tomorrow. So as you can see here, even all the way down toward that 370, 363, whatever, those guys who even buying in the money down here, or 364, excuse me. I mean, it closed at 63. Now we know there was probably, probably a little bit higher before the market really closed, because they bought it. If they bought them inside of that 364, right? They instantly, received that. If they got that first initial pop like the market did and went up and shot up like 366 and tried to go at 367, that contract was up a nice little quick little bag, right? Mm-hmm. If they was in the mindset of always be closing, they would have took that profit right away if they traded, right? Because that was a quick bag. But swinging until tomorrow and with the expiration, yeah, it makes sense. It makes sense. That you would want to have some kind of level of follow through or continuation. Granted, the way the market closed, but that's just one piece of the puzzle. The futures have to confirm that trend bias. You got to get through all the other sessions tonight. But guess what? They got beat up today too. Europe closed down around about 2-3% today. They were negative 2.3% today. So they down. So they trying to play back some of the losses they got from yesterday. You see what I'm saying? So everybody in that same boat. So now you just need China to really bail you out. Let's be honest. Matter of fact, let's go look at the future real quick. I'd rather do that until we get ready to close out. But
good luck.
We already up. We up.
No. I say good luck to China.
Right. Yeah. Because they've been all over the place lately. All right. Out the gate, look at oil. Out the gate, oil is already down. Almost a whole percentage point on crude oil WTI, which makes sense. Again, this is that kind of proverbial pullback, or even everybody taking profit tomorrow. Why? Because what's tomorrow again?
Double witching.
There you go. See what I'm saying? So people like, well, see, they selling off oil. I told y'all,
quadruple witching.
That's it. That's triple witching. Right? Right. You got well, actually, technically, you got two. You got quadruple witching. That's when you have like 4 different contracts coming to expiration, and then you have triple witching, which is the typical, right? Equities, futures, and then commodities, right? Yeah, I think what's the fourth one? The fourth one is what? That's the quadruple. That's the big one that we had. I think we had that one like once or twice a year, the quadruple witching, if I'm not mistaken, right? I think I put a calendar out a while back in the group on it, but it's within that round where you got all these contracts expiring. So the fact that people made a ton of money off oil over the past, let's just say hypothetically, right? Let's just look at the weekly on loan. When oil came down and hit, when in this case just recently did that, but I probably need to look at 2 weeks out, but nonetheless, we'll just play this area here. That's still around about 116 and change. Crude WTI got all the way up here towards 120 and change. That's a lot for the oil market. Y'all know that. That's a lot, right? That's a lot of money that was made alone on those calls, right? Or that upside swinging in the oil alone. Some of those people are already like, okay, I'm gonna take profit, right? Time to take profit, because a lot of contracts expire anyway. They don't know how everybody's gonna feel about their position, if they're gonna roll or not. They just say, I'm just trying to get ahead of the selling potentially. We're still at a good place where we can play off some of this pullback and then roll higher potentially. But as of now, we got we pulling back. As of right now, look at the futures, right? Again, we just talked about Asia, right? 9 o'clock just happened, so we know more China coming online right now tonight. So as of right now, let me refresh this here, because did I refresh it? Let's see who's going on. Well, I already refreshed it, or did it not? Hold up, is this thing? Okay, there we go. I'm like, man, I beat my little computer down there, the hard drive. So right here, as of right now, you got the Nikkei up, right? Nikkei up near 0.5%. Of course, they got beat up last night. Who else we got? Asian market, or the topics in this case right here, is down near 2%, right? Waiting on these guys right here to come online, right? Which is the Hang Seng and the China 8 shares, right? Or even the CSI, excuse me. This one here, CSI 300. Those are the ones you want to watch for as age, like China, right? Nikkei, definitely Japanese market, is up again around about 0.5% and carrying the market thus far, right? So when the other ones, big dogs, come online like this right here, this Hang Seng, see, they dropped in the 3% yesterday, right? The topics, the Hang Seng and CSI 300, all that stuff, even the China 8 share, they dropped well over 1%, plus yesterday. So you can see how our market came through and follow suit today with our drop, right? Because our interest rates again affect theirs as well because central bankers are all somewhat what? They follow Jerome Powell more so than what they follow their own situation. Right. So that's the domino effect, basically. But as of now, when they open up, right, unless they got a holiday, I don't know if they got a holiday or not, we'll see how they respond. Right now, the Japanese market is responding, they're up for now, and we're up for now. As of right now, the futures are showing, we're up, rough around 368 and change, right? Right, close to that, at least 367, 87, whatever. So that's that potential value we're talking about. At least, some little snapback potentially, but they got to get through all this right here throughout the night. All right, the German DAX market, they got to get through the FTSE, even Singapore market, all those markets like that, because those are notable markets, of course, like Evergrande, Singapore, all them, right? The Nifty 50, right? The Korean market, all that stuff, right? I mean, those are the top tier ones people gonna be looking for. Right? So, but as of now, again, those positions they made the most sense. You see what I'm saying? That upside potential value, granted, because you're already somewhat at the floor. If you try to buy puts around 365, if you bought puts around 365, 366, maybe 366, but 365, 364, you literally already at the floor. So, you weren't gonna get that much more out of the market today than what it gave you at that last little, push down below, flush down below 364, or inside of 364 and change at that point, right? Granted, the way they tried to turn the bottom there, at least for now. But you got all the strength, back to potential upside. Granted, if you get a chance, at least test that old resistance line there at 369, right? We probably hit that tonight during the future market. I'm almost certain we probably hit it. If we already haven't hit it, I'm pretty sure. And then the rest is just saying, can they keep the market up there until the opening? So that's how you play a lot of those proverbial, swing backs or whatever you want to call them, uptrend, rounded bottoms. When you've had such a demonstrative sell-off for the day, you're playing back at least some of that you don't want to call it capitulation, but some of that euphoric, profit taking that's coming from the people who ate really well on such a massive gap down like that. In this case, right, the bears are just eating right now. Again, somebody gonna wake up tomorrow and have them an early holiday. You know what? I'm out, bro. I made enough. And the more that they cover or sell, of course, that causes the market kind of somewhat squeeze, right? Because the algos will witness that, and they'll just start buying. They're gonna buy back those open contracts, right? Mm. And that's what caused that little so-called proverbial squeeze. That with the market mates kind of aiding it, aiding and abetting it, right? But they'll play back into that, and then if the market fails and just can't really go any higher, then you'll get that proverbial kind of chop, go sideways or downtrend back down towards some part of that those are previous lows. Right? But either way, you can make money inside of that entire move in the intraday, and then you can just say I don't want to deal with the rest of what's going to come. With the fact that we got triple witching tomorrow again, and that typically happens on the back end of the day, right? That's when it typically goes down near the back end of the day on average, right? That's when it gets really ugly. You already know, for the most part, most people, if they already had a mind that they're going to close out, right? They just planned against all that potential volatility and the time value of the theta eating into their premiums, right? Depends where they got in at, in that regard. So there allows where you asked that question earlier, Brandon. If you buy any contract for tomorrow, if you're gonna play the 0 days expiration tomorrow, you got to be really good at your entry, really good at your entry. If not, you got to buy into next week. You're gonna have to buy into next week, right? Because you're gonna need the market to give you at least a window where the theta ain't just gonna churn and mash you all up. You know what I'm saying?
Right. I need some type of signal or something.
Right. And so, and using that same scenario, again, we'll just say 370, right? I can assure you the ones that's going to expire on Tuesday and probably Wednesday, they probably look pretty good, right? Possibly. Let's see. Right? Can you see? Barely. Right? Look right there. 30,000 of them right there. Not making this up, right? 30,000 of them right there. That's for what? Next Tuesday.
17.
See what I'm saying? Look at that. 2,000 of them are already open interest, right? Those are people who bought, obviously, yesterday and took today. for that same 370 strike. 30,000 is sitting at that. For hold up, that's the I'm on the wrong one. That's the Greek stuff. But same thing, y'all see it there. In terms of the value there. 30,000, same thing in terms of volume. Those contracts right there, look right here. They dropped 7 points today. Woo, boy. That means these contracts, with like $1,000 or something like that. They ended up around $3 and change. So the same would be if you bought that into the close for 370 for next week, cost you, somewhere around that a little bit less, potentially, give or take, right? Give or take. Depends where you bought it in at. But nonetheless, that's 30,000 value that came in at that strike price. Right? Look at the people who bought the 368 puts, right? Or even better, the 370, or that's what they call deep in the money, right? But the 360 puts seem very, plausible. Granted, we close inside of this, inside of this value of the trend bar, or channel, I should say, that those seem pretty plausible for some people. Going into next week. 39,000 of those contracts came in today alone. Right? Again, let's go to Wednesday. I want to take this all the way to at least to Wednesday. 370 strike price. Look right there, 18,000 of them. Right there. Right on, what do you say? Right on, right? Somebody's playing it for something, right? Somebody knows something. People saying that somebody knows something. But it just seems plausible. It just seems plausible for that potential value, given that we're inside of this little next window or channel of opportunity of basically 371, if you will, 371, 372 down to at least 362. Make sense? Right? As it shows here on the chart. See right here? 371, somewhere around that 371, right around that little wick right there on that candle there, down towards at least 362, right? I have 363 here, of course, but down towards that value of 362, 363 down towards 362, 361. It's that kind of same, way to look at it from that angle. Right? But, we said a whole lot in this moment, only for you to say, well, okay, if I'm going to, look at the market from this perspective, now everything that we talked about for just a SPY alone, it's going to correlate into a lot of the other assets. Right? And mind you, when we even think about the Qs, right? The QQQs themselves, man, look, they got other pressures on them, right? But young, interest rates, that's going to kick them in the teeth. They also got the pressure of what's also potentially dragging the QQQs down right now. Anybody? What's also dragging them down? Anybody want to take a stab at that? Falls, any other, weigh on the tech sector. What's also weighing on the tech sector right now?
Supply chain issues.
Not from that aspect, but just when we say, you can say that to agree. But I'm just saying, as far as
inflation.
Okay, there you go. A little bit. Right. So there's been inflation, right? Right. Of course, we know that's a problem on tech. We talked about already the value of right? Yields, right? You got to hit with a 75 bip and you got a 47 quantitative tightening. That's definitely not good for tech, right? But also, they also have another pull on the tech sector too, right? There's also another
dollar.
Y'all see this right here? Can y'all see my screen right now?
Oh yeah, Bitcoin.
Bitcoin is heavily correlated as well lately with with the tech too. That's why it's been selling off more than a lot of the other indices. Because Bitcoin dragging it down too. And y'all know, again, it's only a matter of time. Either they're going to crack that 20 or they're going to have to bounce. Michael Saylor sitting down right here with a margin call. Boy, you see he's sitting by that phone like a bat phone in the house. He's waiting for that phone not to ring. But you hold that, praying that phone no rain. Boy, I just got a bottle of good whiskey and in the favorite little corner chair that's sitting there by that phone like, boy, in a minute, boy, any moment I'm going to get that phone call, margin call. And just like y'all was saying earlier, I think Sonny was speaking to that today as well. All right. It's up. You say he got about what? About 5 billion into it. That's still gonna liquidate Bitcoin. Like, but boy, you talking about a pullback? It's coming. Right. So Andrew got we say JEPI, right? It's coming. Why? Because those things are what? You know, what they call the residual effect, right? It's that residual effect, right? That when they just bring the market, you know, down with it, it's lights out, right?
Thought it was supposed to be decentralized.
Hey, notice that? Remember I said, I'll tell people, man, I don't like that. I don't like the way Wall Street trying to get booed up with Bitcoin right now. I was signaling that long way back in the summer, I should say more the fall of 2020. Like, man, like, yeah, some adoption, but we don't need y'all to get too cold up with it. We still trying to be have a level of anonymity here. We don't want y'all, you know, and the more and more they just let them get booed up with them, and now you're in trouble because they just use you. They use basically Bitcoin for what? For liquidity, for tech sector.
Yep.
Because now they say, okay, well, see, you got Coinbase, you got MicroStrategy, see, you got Overstock, Overstock, Square, PayPal, you know, some of them, like, bro, like, don't y'all do us like that. You got the Grayscale Trust, even that's on OTC, but still, they were just throwing around stuff like, bro, but it's still decentralized. Y'all can't touch us, right? But here, you know, here we go. Right? As they say, here we go. So now, you know, that downtrend, you know, picks up. How is the SPY going to react to the tech sector selling off? Because if it drags the tech sector, even with the big dogs like Apple, Google, Amazon, them fighting too, I mean, like, how you gonna win that battle, right? On the SPY side of things, and say we're just gonna buck the trend of the tech sector and just gonna just ramp and go higher when the tech sector is bleeding like that. Now, every now and then you will have that, you know, divergence, but it's gonna be very rare because one of the biggest weightings in the SPY is what? Apple. Right? So you can't have it both ways. So that in itself is making Wall Street really upset. They did all that cheerleading for it at some point, and now Bitcoin selling off, they mad now because they can't stop they can't stop the bleeding in the tech sector. They can't stop the bleed. And 10 years kicking them in the behind, the 10-year yields, right? Interest rates going up. That's another problem on top of on the tech sector. That's why it's down the most this year. Not even rocket science at this point to realize that. This is why the tech sector is down more than the SPY and the Dow, whatever. And they got they borrowed the most money, you know, cheapest money at the cheapest rate of all companies out there anyway, too. Right. So that gluttonous window has got them all up, you know, up the creep out of paddle. Right. So I see Sister Angie got them going old school with it. You got them junk bonds out there now. HYG is definitely junk bonds, right? They getting I mean, them, I think it's another one. What was I something? I forgot the other junk bond one. But yeah, junk bonds are just, you know, again, they really in trouble now because when the feds were buying them up, it was all gravy, baby. Right? It was all gravy, baby. When the junk bond was rallying, keep in mind, junk bonds rallied during, you know, look here. They rallied off the low, COVID low, peaked at around 85, and now they started come down. Junk bonds. Some of these are triple rated junk bonds too, right? Just completely just, you know, no man's land type of investment. You come out in the junk bond world and start trying to make you a little dollar, seeking alpha out here, right? Again, we talked about this stuff, you know, copious amounts of time. Again, the idea of muni bonds. Remember, the Fed were buying muni bonds, so they're buying muni bonds, municipal bonds, basically junk bonds. They were buying debt. I mean, all kind of debt that you can think about. The Feds just start buying all that up. They were just buying everything. They went on a massive shopping spree and bought even the junk of the market. And now, guess what? All that stuff is coming back to bite them now.
Oh, them premiums looking good on the bar chart though.
Yeah, I can only match to my HYG.
And other one.
JEP and she's JPI, but yeah, I mean, again, you thinking about the idea of how, you know, you're looking at this stuff now and saying, okay, man, this right here just seems to be pretty obvious, right? It's obvious at this point, you know, what's happening here, right? Because now they have to pay the what? They have to pay, right? They want to pay to play at this point, right? So again, the high yield corporate junk bonds, bro, right? Load it up, right? Load it up. 287,000 sitting in volume today alone. Look at 2 million open interest on the put interest. Boy, look, bruh. These things don't stand a chance.
That's what I was looking at.
Right? Joking like, boy, they don't even stand a chance. This one here gained what 65 cents today alone. Right? Nice little 100+% in a lot of these right here. They're 74 really solid there. Right? I mean, just crazy numbers here. And it pairs well into what the charts look like as well. Right? Now, again, the value that we even outside the integration band right here are right at it. Notice that it's the same as SPY. Y'all see this here? It's the same as SPY right here. Yep. It's sitting right at the gun line. Tell them about the gun line, boss. Tell them about that gun line, boss. You step across that gun line, we're gonna shoot you. But I mean, they waiting on them too. So yeah, any value of if they can fight to get back in there, but this, of course, this not gonna get the tent of a SPY or a tech, a QQQ, whatever.
Yeah,
right?
it takes time for these.
Say again, over?
No, I was just saying, yeah, it takes time for ETFs.
Yeah, right. Especially these type, right? Even though they've been very liquid of late, of course, granted, they've been moving late because the bond market is what really controlling them, right? The 10X to that of the TLT, right? The ZNX or the ZNB, they're moving right now, massive, right? Because there's this big shakeup in the bond market with interest rates starting to go up. Right, short paper, long paper, all that stuff just being that spot been blowed up, and they, look, they have nowhere to hide. Is my point. Y'all probably been hearing it a lot lately, all over these publications. It's like, well, where can you hide in the market? Cash. That's what most people saying. Cash. If not, you have to be like we talked about literally last year. You say we're going into a what kind of market? A picker's market. We're going into a picker's market. You got to be on your game now to be trading this kind of market right now. Right? Because you're not going to survive, with the old business model or what's called business as usual schematics. So that's why we said earlier, you got 3 options. Buy, sell, or do what? Go fishing. Go fishing meaning do nothing, get back and just let all this noise die down. And then when the carnage is done and the ashes are what? Smoldering, that's when you come back in and say, okay, let's go to work. Right? That's the nature of this business, of this industry. Right? And that's what I love about it, because you still have complete control. You get to pick and choose how you view it, value it, and also operate within it. There's no written rule that you got to be in here every single moment, every given, whatever. Not from a risk on perspective. You could do it from a study value, case studies and stuff like that, observation, put some notes together, or the market trade like this today. Or let me notate that, right? Let me put this down for future reference. But when the market is ready, you'll know. And of course, people like myself and you all as well, we're gonna be right here to kind of somewhat, help y'all navigate right through. I think we started to get to that proverbial point, guys. The macroeconomics getting better. The charts are starting to stabilize. We see money coming in to certain values. We see a little bit of semblance of organic growth coming back into the labor market and the equity market revenue stream value, where they're doing actually good, respective, responsible spending and CapEx spending. And when you start seeing all the things begin to align themselves, even though we will probably be ugly deep into still higher interest rate at that point, but that'll just show that the fiduciary responsible companies at that point will be the ones standing still. All the junk stuff out of there. Think about all the SPAC companies that were going wild, be savage, crazy, last year in 2020. Where are they now? Y'all probably barely hear about these SPAC companies now, do you? Don't you? Right? Non-existent. For the most part, most of them out of there. And the ones that actually converted from a SPAC, into a regular company, they struggling because they still didn't have the level of production to equate that of the market caps they got from all the euphoria. And now they got to sweat, build out their companies organically. The market's just not going to give them a pass. A la Rivian, a la Lucid, a la all those stuff like that. they're all over the place. Right? Well, I think it was a firm. Well, firm came in and spec. I'm not mistaken, but all of them, you know, they have to go through the proving ground stage right now, and that's fine, right? Again, shake out the weak hands, sink or swim, right? Because all those companies that crashed, that were just way up there, meteoric, you know, numbers again, Teladocs and man, what was that other one was what was that? What was it? Was it not Unipad? Or was it Unipad? I think it was Unipad. What was it called? What's that company called? Oh yeah, UiPath. I messed it up. Look, like this one right here. Like this is crazy, right? I can't even squeeze it into the chart, right? This on the daily. This is crazy, man. I mean, this straight craziness, right? I think this was one. This ain't the one. It's one of them though. But this one here was around about $90, and it came down and hit all the way down to what? This was one of them, right? Because it got up towards like near 90, and then it sold off all that euphoria, all the way down to what? $13. Now I'm only using this because look, it was just $90 May of last year, and in May of this year, it came all the way down to $13 from 90. Like who was buying this way up here at 80, 90, 70? Who was buying this stock way up there? It opened up at this point in terms of this mind. It opened up at around them points too. Y'all know who was buying this right here up around $70, $80 a share? Y'all have a guess? Y'all probably already know.
Pelosi.
Got him.
Oh wow.
How many people follow her? A lot. Because they trusted her. They put everybody got on her back, and they just been what? They've been going to the poorhouse ever since. Again, that's why I tell people, you gotta look. You can't follow in and everybody when things change. Again, clock is right twice a day. At some point, you're gonna have to learn how to fish and dig and read instructions on your own. These people set tons of people up for failure. And people buy UiPath $60 a share, $70 a share, even $80 a share. And they just sat in and held it all the way down. Well, Kathy said, Kathy buying more here. All right, great. I'm gonna buy more here too. They just been putting good money on a bad trade. All the way down from 90, 70, 80, 90 to what? $13 a share in May. Could y'all imagine that? Yikes, right? Yikes. I mean, a lot of stocks she was in like that though, and just telling people some crazy stuff. Anyway, y'all get it. Craziness, absolute craziness, right? Really quick. Same way here. She been buying this one all the way down. She bought it up around IPO value, all the way up into the 400s, whatever. And she been buying all the way down. All the way down. From 420 plus, now sitting at $50 a share right now. And they just did laid some people off a couple of days ago. Make the compelling case that the revenue stream is gonna be in place for somebody to be buying Coinbase at this valuation if they laying people off. Now, laying people off is a gift and a curse scenario, depends on your structure. If you lay people off to cut cost, false liability, to save capital, to increase value, that's one thing. If you laying people off because your growth is now being retarded, right? It's being pulled back, right? From that regard, then how can you account for the valuation or the need to buy at this level of evaluation? You see what I'm saying? You don't turn that around overnight, right? When you start laying people off, it takes time for that those wheels to turn and grind up all the potential value, what that looks like when when the smoke clears. So that already takes you out the game for a minimum of 1 quarter, 3 months, minimum. You see what I'm saying? So, bro. And then, especially with Coinbase, they're what? They're correlated to who? We talked about it earlier. What? Bitcoin. So if Bitcoin ain't showing no need, moments of bottom, we don't know if it will or will not, but it's up against some very critical levels here near this 20,000. It's barbecue mildew time for Bitcoin. If Bitcoin break that 20, and let's say if it deluges down towards what, 16 down or whatever, whatever, hope it meanders around 19, but I hope it does. But if it ethers down towards that 16, where you think Coinbase going? Coinbase going back to what, 200 moving average at 175? I think not, right? It's going to come right down towards the way this linear regression band is taking it until it changes. It's going to follow the band right on down with it. Right? It's going to come right on down with it. Unbelievable, right? People like, man, this is crazy. This, bro, 420. Jim Cramer was telling everybody to buy Coinbase. He told everybody it was going to what? The 470, right? He was telling people that just recently, back towards what, November? I think it was like, it was May or November 2021? We're going to 475 on Coinbase. How many people bought according to Jim Cramer's advice? A lot of people. Where are they today? Selling their house. Giving up a kidney, a rib, a firstborn child, something. Margin called out. If they weren't prudent and sold, a lot earlier, or if they put good money on a bad tire, again, bought the May pops, they may pop in a moment, they're in trouble. All right. So that's the extent of, again, you being able to be in a position where, if you're going to follow the market, guys, look, you got to know, how to parse the straws better. You can't let, again, a lot of the talking heads and the TV's pundits, man, like those guys' track record right now is so horribly wrong. It's not even, funny how they just misled a lot of people. Tom Lee, think about that. Tom Lee, Tom Lee. And they just keep bringing this dude on. Notice that they just keep bringing him on. And when he was right, he was what? It was all good, right? Because again, everybody was a genius doing what? When the feds were print money, that's how Cathy Woods claimed the fame came about. Notice that? Now that that's not happening, they are bad read on the markets right now.
Crystal Ball Lee.
Think about that. Seriously, I'm just asking y'all, how are they this wrong now, guys, if they were that right then? I'm asking. What do y'all think?
They're decoys.
It was getting paid.
Crystal Ball's foggy.
They're using investors' money, right? And they're getting paid twice. They're making money off the firm's, ability to grow if they're able to grow, but guess what? Off the fees of those clients too, right? So they're using other people's money at a point when the market was just given, they just cleaned it. But now that the market ain't doing that, and they still telling people, we deploying your capital. Keep in mind, Cathy Woods got to tell her people who buy her fund that what? We're deploying capital into Coinbase here at 320, 310, 320, because we think it's going to what? Turn here and go back up. It dumped, goes down to 240. We're going to deploy a little bit more capital here, guys. This is within our plan, guys. It's in our plan. Trust me, it's in our plan, guys. It dumped, goes down to 160, 170. Guys, trust us. We're doing what we're doing. We're going to add more to our Coinbase holdings. This is good. We're getting a better dollar cost average here. We're we're lower than what we began at, of course, but this is good. The market's going to bounce here. Now you down to $70 a share, bro. And now what? 50. Like, moment of silence for a moment of silence for all them people. What? Hard-earned money. Who fought this woman off the cliff. Now, of course, she could easily be right if they can what? Withstand the whole of this thing for about what? 3 or 4 years possibly. Because now she's talking her 5-year window stuff all of a sudden now. Yeah, she really beating that drum. Like, but hey, whatever. I'm just saying, it was all good just a week ago. CNBC, you already know everything on CNBC is just straight. Oh man, everything on CNBC right now is straight trash. They were the biggest market cheerleaders of all, TV heads, talking heads, doing the value in the field, just printing all that money. They were excited. And everything from that point on, it's just been a bad call on the market.
They all became essential workers and entertainers.
That's all they were. And I've never seen so many people who've been in the game 20, 30 plus years making such, and sitting there bad, negligent type of calls on the market.
They became Trump. Yeah.
Think about that all the way down, and they still were doubling down on dumbness and stupid. No, the Feds got it right? Guys, trust the Feds. No, this is transitory. All that goofiness and the Nigerian brothers and
not even Trump, Brandon.
what's his name? Steve Wiseman, and y'all know all of them. Like Stephanie Link, like all of them. I ain't got to go down the list. Y'all already know who they are over there. Like the only ones who kept a level head, there's a few, right? But the rest of them straight charlatans with it. And then they bring on people like Tony Dwyer and Jerry Siegel and Gene Munster. Gene Munster tried to play both. He tried to stay neutral. I give him a little credit. He tried. But Tom Lee, like them types, man, like, bro, get them jokers out of here, bro. They didn't set so many people up for failure. It ain't even like funny at this point. Like how many people lost money on their calls? Okay, he was the one telling you that Bitcoin was going to like 100,000, right? 2021? Matter of fact, he made that call in 2020. He said 2020, by the end of 2020, we're going to 100,000. Y'all remember when he made that call, Tom Lee? He's like, we're going to 20,000. Excuse me, 100,000 in 2020. And okay, about that, Tom. Well, see, given this and given that, all this stuff, and how many people just like, okay, bro.
Y'all make Warren Buffett look like God.
Boy, him and Charlie Munger, right? Rat Poison Square, duet singers. Right? They like Harold and Darrell Oates, or the Oates brothers, right? I can't go for that. No, I can't go. Them sugar died, but them sugar came out there and put out that press release, boy, everybody went going in on Warren Buffett them. But sugar was like, bro, look, you gotta get out of here with that, Warren Buffett. We like you and everything, but bro, you talking about my Bitcoin, boy? No. Okay, yeah, with the 62 out of there. After that, look. Again, it's just man. I don't know, man. These people supposed to be professionals, guys. Accredited brokers with Series 6, Series 7 license, all this stuff. They're supposed to be accredited.
But they're professionals with bonuses. That's the problem.
They get a paycheck from fees. And if they were like when they first came in, they probably were hungry, like we are hungry traders and doing it, the right way. And then they got, too big. They became, personality, congeniality contest type of people. And they lost a lot of that passion. And they just making these scenario calls. But I've always said, people who trade with bigger money, they lot size to them. See, their windows are much more tighter and smaller. Even though they talk about a good durational game, but they can afford to play 30 cents, $1, $2. For us, we need, that and then plus some.
Facts.
Think about that for our money.
Preach that.
Right? And that's important because a lot of people miss that when they start coming in the game early.
Yes, sir.
How this stuff work. Right? So we use different little strategies like option trading where we get a little more for less. Again, but that still comes with a lot of risk too. You still got to know how to trade responsibly even in that market, right? Outside of that, you got to do it really, the strategic way, right? Slow and steady, right? That's why we say base hits above all things, right? We're not looking for home runs, right? Because home runs will wipe you out. Get on base. Learn how to be consistent with your trading, your strategy value, your read on the market. You got to be a better read on the market, right? You got to beat the quants, beat the analysts, goofiness, right? All these price targets that we're throwing out during what? Beginning of 2021 and mid 2021. I mean, crazy price targets, right? Crazy. Kathy Woods came out literally a week ago, and she said Zoom is going to what? 1,500 by 2026. I know it was 2025 or 2026. She said Zoom is going to 1,500 a share. I'm just asking for a friend. Is that In the competitive landscape, I mean, there was the same one saying that Netflix was going to 1,000 plus. Like people like Laura Needham, right? She one of the biggest cheerleaders. Well, no, she was the biggest bear against them. But who was that? Was it not? Was it that Suzuki guy? Not him. Who was it? It was one of them guys. Not Marco Kolanovic. It was a couple of them, one of them well-known Wall Street analyst bull. For one of them, JP Morgan, one of them guys, talking about Netflix was going to 1,000, all that stuff like that when it was trending up around about $500 a share, 600, and it went up across crest, and then it what? Imploded on itself. Like some of those guys were the same ones, that was really telling people to start buying, that were telling people to buy them assets way up there. Right? I like seriously. And this was at the time when we was beginning to say what? Okay. Oh, let me get out this hourly chart. That oof, boy. Oof. Right. These are the people who are telling people to buy this stuff way up here. And granted, guys, y'all know what I know. We were planning for this moment, right? We were saving this bacon. Look right here. This was November 2021. That's when it became very apparent that what? Inflation was not transitory. It was real. And it was need for the Fed to start doing what? Raising interest rate. That drum began to get beat more and more. The 10-year yield began to kind of wake up even more. And the value of what we're talking about falls what? Slow production was starting to be a problem, right? The wages value was still kind of unstable. So how are you going to afford to be at peak value at that point? It was at peak value. They had hit peak clientele value to a degree in terms of America. The international market was starting to kind of it was wavering. They didn't have any more people they can feed off of in terms of subscribers that they didn't get during the pandemic and at least through the summer of 2021 into the fall of the year. Everything from that point on, when the market was up here or, rating Netflix at $500, $600 a share, and they were saying, okay, we're going from here, we're going to what? $800, $900 probably a share, potentially even $1,000 for Netflix. And people were buying up here. They were buying at 650, 700. And then, they parachuted out the blimp, right? Just, yeah. And then our good old buddy, Bill Ackman, came in and tried to save what? Came in and tried to save
Netflix.
Didn't he? He tried, but don't save them.
Save that.
They don't want to be saved. He tried to save them. Boy, I just bought that dip down here.
Burnt.
Boy, you talking about a billionaire got hit across the head with a billy club by the broke folks. Right? They just hit him upside the head. Like was there with the Django, hit you in the head with a hammer, throw you in the hole, right? It's lights out. And they bought that what? They bought that little dip, right? They bought that dip. I think he bought around around here, actually, like 340, somewhere around that thing. And he got the market, he rallied the market back up towards near 400, right? They got up as high as near 400. And guess what? Going into the earnings, right? Remember, because it was going into that earnings, it's like, Bill Ackman and guys, he didn't bought this much. Trust me, they got to beat now. He must know something that everybody else don't got, right? I'm like, okay, this is interesting. I bought puts back here, made a killing on the drop. I'm gonna buy me some more. Of course, we did our show, man. We did our little Netflix show that time, that special Netflix show, and we broke that thing down, didn't we? Boy, we broke that thing down that night. And, lo and behold, y'all already know. I was like, I already had my position staked in the ground, so it wouldn't have been, no conflict of interest. I already had my puts in play, and it's like, bro, look, they're gonna prove to me that they can survive now, knowing they hit peak, all this stuff and interest rates are going up, peak value of people with, their business model was obviously, costly in terms of their debt structure, everything else. I mean, just down the line. I mean, you couldn't make this stuff up. And then they woke up the next day, right? And the stock was down to what? Oh, what happened, buddy? It went down. It woke up down there with $200 and $10 a share down there, from 340 to 350. Like this stuff is just like, and Kathy Woods and all them people like that, whomever, those types, y'all know what I'm saying about it. They were just cheerleading. No, Netflix is good here, bro. reached our proverbial bottom. We double bottom here around this 330 area. We're good. We're good, guys. We're going back up now. It's all good just a week ago. So I'm just saying. So, and some asked, as soon as we broke down here to the 200s and got below it around 160, 170, even 180 area, they were like, bro, this got to be finally the bottom for Netflix. Finally got to be the bottom here. You know, and then of course we broke and went lower back down to 163. And that's the question as we get ready to wrap up here, guys. I'm just asking, given where we are right now in terms of, if we were to rate the market in terms of a baseball, right? Like baseball, right there, like innings, right? You know, whether you play baseball or not, you know, they got 9 innings in a baseball game, technically. If I ask y'all, what inning do y'all think we're in terms of inflation, rate hikes, supply chains, the medical side of things, COVID pandemic, all that stuff like that, Russia, Ukraine, potential Taiwan and China conflict, food shortages, energy, oil, etc. What inning would we be in at this point of all those different factors?
We just started. We're not even at halftime yet.
I was gonna say bottom of the second. We finna go to the third inning. They just struck out.
So y'all said, so we got some like bottom of the inning, right? Just early on, third inning, right? Okay. Anybody else?
I was gonna say we're at the part where we sing the national anthem and everybody got their hand over their heart.
Ooh, boy, and you brutal, bro. You brutal, bro. You brutal, bro. God, them jokers ain't even came out on the field yet. They ain't that good, but they ain't got what they call dirt underneath their cleats. Good. They got no dirt on their cleats. Goodness, woo, boy. I'm serious, y'all. This is how y'all gonna have to start thinking about this. What inning are we in and all that? Because the Fed's been telling y'all we was what? We was in basically on the what? On the upswing. We was on the what? The 7 to 8 inning in terms of cleaning up all this what? Inflation. Janet Yellen was telling y'all that too.
Hey, Oba.
Think about that. Oh, go ahead. Oh,
well, I was gonna say, they actually they lie about a lot of stuff, but they actually are telling people what is to come, because a lot of things that I've been watching, a lot of things that I've been seeing, they're determined that for sure in 2023 is going to be a recession. By 2024, they want to try to start relieving most of the inflation and recession by 2024, 2025. If they're already talking like that, this means that there ain't no upside to this. That 480 that people was talking about, that's over with. Not this year.
And that's why y'all know what I know. Because I shared this with y'all a while back. Y'all see it right here on my little Facebook channel here, right? See it right here? I pinned this up here on the 31st of March. Well, not maybe a little bit after that. Somewhere around, I think it was around the beginning of April, right at March 3rd. I pinned this at the top of my my Facebook page. It's been sitting there ever since. Right? Q1 fiscal 2022 market wise, it's in the books, right? We closed out that quarter, right? Same way, quadruple witching, all that. Our top was inside of the intraday, what they call the intra-year high. This is our intra-year high, meaning after we got through all this, crazy, and the market began a chance to kind of rebound. To me, this signaled the natural high of the market thus far this year until they prove us different. 462. I'm going to leave this on my page for the rest of the year. They're going to have to prove to me that they can get this market back up to a 462. Let alone this 480 to let you speak to over Sunday. This 480 and then going to 500. Keep in mind, Tom Lee just came out literally a week ago, if not this week. It was talking about we got a chance to still go take out the high. Some analysts were still saying that we had the ability to go take out the high, or at least get back up towards those areas before the end of the year. I just seen some wild things happen, bro. you know, it could possibly happen, but you're gonna need a whole lot of things to happen in their favor, or it's gonna be a whole lot of what? Manipulation. Because everything is now hinging on if the Fed's gonna what? Cave in to Wall Street and what? Stop tightening and start what? Easing again. That's the only way. And if he do that and the inflation is still what? In a runaway mode, that means he just chose what? To save the market over what? Over fighting inflation. You can't have it both ways. That's why they say the Feds are backed into a corner. They what? They stuck either way. Well, they actually what? Made their own bed to be in this position. They had a chance to really get ahead of this stuff. And they chose to do the opposite.
Remember that they preparing for wars. Remember that they just happened to find these million tons of gold, right, in Africa, and everybody was putting their money into the metals. So you know they waited. You know what they're doing. They're changing the fiat currency. They're coming out of that.
They're in trouble because again, that old value or that standard, because y'all know we already know we went over this a while back too. In one of our broadcasts, when we broke down the idea when they were talking about kicking Russia out of the SWIFT, right? And all Russia did was what? Went and joined what? The CIPS, right? That's the Chinese currency value within the renminbi. Now, we're not saying that China is the what? The second biggest reserve currency on the planet, because actually it's not. I think second to the USA is still going to be what? Great Britain, right? The British pound, if I'm not mistaken, or the euro, right? And then you got some, you know, maybe the Japanese yen, I think is like third. And then fourth is actually what? The Chinese renminbi, right? Think about that. But we're talking about the biggest economies on the planet is basically going to be who? China and America, right? Some would say China already overtook us, but whatever. But why would their currency be less than? Why? Because most people are more still fluid in spending those other currencies because they kind of been around what longer than the Chinese renminbi. That's the only reason why, right? That's the only reason why. But China's gaining ground. Why? Because if they control the mineral market or the commodities market, which they are, they buy up a lot of mines and all that stuff. If they follow the playbook that Russia just pulled and saying, guess what? I'm not gonna play this game with y'all since y'all want to put them sanctions on me. If you want to buy my oil, you're going to buy it in what? In rubies, right? Ruples, whatever. Look, that means, guess what? How many other nations may start taking that same, what? Play out of their playbook and start doing the same thing? What would that do to the US dollar?
Venezuela, Brazil, India.
No.
Think about that. That would crush the USD dollar. Because y'all know Gaddafi tried it with the golden dinar in Africa with the African Union. And they what? They murked them. But get out of here with that. No, we need to, keep robbing Africa. There ain't no way in the world we're gonna let y'all what? Monetize y'all commodity because y'all would bankrupt the entire world if y'all did. They know if Africa go that route, it is game over. But guess what? Africa's back on the table trying to do it again. Because guess who gave them a leg up and saying you may need to start doing that? Russia. Putin told them, like, look, guys, look, I get it. We had our hand to destroy Africa too, but we're trying to make amends wherever we can, even though we still crazy over here. Y'all know this, y'all know the history. But if y'all ever, commoditize y'all basically monetize y'all commodities with y'all own currency, everybody know that Africa will bankrupt the entire planet. The only people that may survive will be people like Russia, possibly, and China. Maybe a little bit of South America, but they so politically tied to America, North America, that is. But naturally, they just, stuck to their own laws. Man, look, a lot of these little parasitic countries, like America, Europe, all them, they'll fall literally in short order time frame, overnight. They'll be stuck. And that's why there's a big problem right now in terms of the level of the central bank, because they went on this war campaign to blow up all these sovereign nations to overtake their economies and their commodities, install a central bank, install a puppet leader, right? So they can control the commodities in the ground to keep the value of their currency, their paper currency, this fake paper, in circulation where they can buy up real tangibles, real commodities, real land with paper printed money. Like, make that make sense in the real world, guys. That's why the gold bugs have always been the biggest critics of the central bank, even though they benefit from it and some values are not, but they understand if it ever folds, they know they're going to have their so-called heyday again. And weirdly so, majority of people who are very bullish on gold like that, those are European and what American and Canadian nations on average. Places where you don't have level of gold in their backyard. Besides America, they dug up most of all the gold here, but definitely Europe, ain't no gold in Europe. How you don't have gold in your backyard, but you're trying to control the gold in South America and Africa and everywhere else? Like, make that make sense. Like, this is this. Look, let me get off here and go eat, man. Y'all finna get me. I'm finna go on my little trip bag. I'm about to go, you know, I'm about to go left. Somebody better go save him. But y'all get it. We didn't talk that stuff so much now it's not even up for debate. So they're artificially suppressing the value of gold right now because they don't want that case to build that gold has always been and will be, from what we know, true and natural money. Just minerals alone, silver, plate, even grains and stuff like that. You know, wheat, that's real money. That's how it was always back in the old day. You barter with stuff that you tangible stuff. You can't look. All right, y'all.
Rice was currency at one point.
Y'all get it. So this is the big problem right now because the shakeup is that we're losing power by the second in America from our policy decisions that we're starting to make, from our mismanagement of how we do our foreign diplomacy. It's in the toilet. I mean, you got nations who just outright, like right now, we're in a crisis because of what happened, and we're desperate more than a lot of nations that are so-called third world. We're more desperate than third world nations right now, which I hate that term third world. Right? When they got all the richest commodity on the planet in their nations, but they third world, seriously? If you get out of them people affairs, they can feed themselves, clothe themselves, do everything without your what? Your manipulation. So how they third world? You don't have that ability to do that. If they shut down these stuff to everybody else, we're up out of paddle. Jokers in America ain't got skills like that. As they try to, act like they do. Man, jokers around here just sit around and wait for something to come hit them in the lap. So whatever, but y'all get it, man. So following it and tracking the commodity markets, the values of what we consider to be real value currency, from a certain point, we got to play ball. We under the rules of engagement of whoever control what? The book, right? But at some point, again, like we talked about, you got to diversify. You get to a point in your life and your career and this stuff, you're going to diversify. You should, if you don't already have some, you're going to start owning physical metal in your person. You're going to start having the paper coupon value of it as well. The same way people buy COMEX, future contracts for oil, right? It's the same reality. You're buying, areas that have a more organic value in terms on the global side than what the currency fiat side of things will have you believe is worth. You'll know exactly what you're doing at the point, how to maneuver better. So you'll be set up just in case if there is a dollar crash or a commodity crash on the outside, we'll be ready to deal with it. That's coming, guys. If it's not already part of your regimen or repertoire, it's coming. The hints that we can talk about these things and you guys start planning for it, it's different than the usual, right? Most of us our goal has always been what? Our goal change. Some of the rappers you've been watching, some of those entertainers, they're starting to get smart. They go out and buy a kilo of gold, kilo gold rope. No diamonds on, no nothing. Just give me a straight kilo rope, Cuban link, whatever. That is the what they call spot price of what gold is. That chain could be turned into the spot price of gold because it's not it's not diminished and altered with diamonds and all the other goofy stuff. That's actually a form of investment. Think about that. So even if you like that, look, go buy you straight gold, buy you a kilo of gold necklace, and don't add nothing to it. Keep it that, and you can still flaunt and floss, but if it ever came down to it, you can melt that baby down and you're gonna get spot price for it. That's an investment. Right? So it's things like that, right? Maybe buy your maybe wife something, give her a kilo worth of rings on her finger, so right? She can't even lift her finger. But either way, y'all get the point. So it's thinking and moving like that. Because if it ever hit the fan, people like Rick Rule, Jim Rickers, all them people like that, the Gold Bugs, Swain and them, and Schiff and all those guys, man, look, they're gonna be like, yep, see, I told y'all, rich dad, poor dad, Kawasaki, what? Kiyosaki, excuse me. Them guys gonna be mad. They're gonna be like, I told y'all. See, I told you. So that's all it is. It's a game of understanding how the system is set up and then maneuvering yourself to be able to weather the storm, if we ever get there, again, if this SIPS thing take off, right? Again, it's still only number 4 up against everybody else, right? You got British pound, the euro, and you got the Japanese yen. Of course, we sit at the top. If that stuff ever implode, mark these words, guys. If the SWIFT system ever implode on itself, and they trying to do it themselves, they're trying to actually what? All right, destroy it from inside of their system, because all this goofiness with Russia. Russia exposed them. Literally, Russia exposed Europe in more ways y'all can even imagine. They exposed them. And now it's showing you exactly how they are not in control as they thought they were.
Was it because Russia has the commodities that
all of them? They got the rich lands. That's basically how you look at it over. They got all the rich lands. And then guess what? Greater Europe knows that. Ain't nothing they can do about that. Russia got them what? Wrapped around their finger. Again, this goes back to historical value. We talking about the Roman Ice Age. That pretty much what? Depleted all the top soil mineral in Europe because they were blanketed under all that snow at that time. It stripped out, and the sulfuric ash, it's killed all the natural topsoil minerals for the most of the what? Their soil composition in that area. It got so bad when they were doing their colonial scourge around the world and colonizing places. They got records where they were taking literally soil from further places and taking it back to Europe. The plant, so they can what? Germinate the ground and try to sustain themselves. Think about the potato famine. What happened with the Irish potato famine in Ireland? What was that all about? The soil content couldn't germinate the potatoes that they brought back from what? South America and Peru and all that, right? And they banked on that crop, being able to germinate, and they had one of them hard winters and it didn't germinate. All them potatoes spoiled and they went hungry. It got so bad they had pushed them from the highlands area. They went all the way down to the coastline. And guess what they started eating at the coastline?
Sea moss.
Boom. Boom. 91, 92 minerals, vitamins, minerals, content, a full day worth of supplementation. Say they behind. Say them. And now in come what? It's Irish moss. Bruh, ain't no Irish moss growing down in the Caribbean islands. That is what? That is island moss, if anything. But they call it what? Irish moss. If you don't get out of here with that goofiness, I be seeing people in the island calling that stuff Irish moss. I'm like, bro, I don't see not one Ireland flag. Bro, don't y'all do it. I'm like, not today, but I'm not finna get ahead of today dealing with y'all. Not today. Old habits die hard though. Again, some people just won't let go. It's like them calling Lake Victoria in the middle of the Congo or down in that region, right? Uganda, Congo, they call it Lake Victoria, right? Behind the Queen, bruh. Like seriously, all right, anyway, let me go, man. Y'all ain't gonna do it to me tonight. All right, we ain't gonna do it tonight, not tonight.
You're cracking me up.
But y'all know this stuff. You got to be. Look, I always say, man, we are our own sovereign nation. As individuals, we're sovereign nations. You have autonomous value, and you have autonomous rights. Even though we know it's a system in place, we get it. But if nothing else, if you are a person of this craft, you get a chance to see things up close and personal in a way that average layman people do not, right? Because you're dealing with what? Commerce, supply and demand, right? You're dealing with it from a homogenous perspective. As an investor, you get to see it. A lot of these things that most people, only read about and pass it because they're too busy, program on the clock, busy. They can't focus and function properly as they need to. That's why they go out and hire a brokerage, right? Or investment banker to manage their money, or a Vanguard firm, right? But that's the most sensitive thing resource they have in their life is their bank accounts, right? Or their worth value. And they put that entrusted in somebody else's hand, right? Imagine that. Just think about that for a moment. Here you are, you learning how to do it yourself. And in doing so, you learn everything about the system from top to bottom now. Granted, if something ever folds, you'll know how to move more swift than those people who are dependent upon the system. Make sense? Because you'll know how to move. You know what other nations, what other lanes, how to make things happen. That's what gives you an advantage. And this is how we say you got to transfer this skill set into your your children, your siblings, your peers. You gotta somehow, some way, right? Be that voice of that liaison. So it's behooving that you what? You work really hard to get it right as possible, right? Because it's going to benefit you more than you can even imagine. So when you run into people who like, again, the people like Tom, all them silly people been in stuff for a long, long time, and they spoil now because they get a chance to reap the benefits of what? Of what? Fees, as opposed to real, true, what? On the ground, grinding type trading. Look, you're like, man, look, I'm not even hearing that foolishness. You telling people to buy? Oh, no, we not, right? As I've been saying since always going back towards what, November, October, I'm not buying, adding to none of my long positions. I'm selling into a lot of them actually at the peak, which I did. I'm pretty confident saying I know I'll be ready when the market shows me more signal that it's on the turn and things are trying to get better on the fundamental side. Then y'all will start saying, I'm buying a little bit here, but I'm starting to buy a little bit. That's all it is. It's a wealth pendulum, and rich people know how to play this pendulum to the T because they got more money, right? They have more leverage within it to where their small moves turns into what? Massive gains. I always have to count, right? Our little position here and there got to count, but it's growing. That's all it's about. It's all about the growth perspective of it, the journey. It's gonna work. It's gonna work just proper as it's supposed to. Gonna work properly into the value that your training is providing for you, the value that your skill sets are revealing to you as you put more time into this to be, autodidact, your self-study that you're doing in your free time. Just staying close to the market as much as you can, I should say that. Still having a personal life, all that too, granted, but it's going to make you a better read on this stuff well into the future. And it'll be you saving a lot of your friends and peers and family members from making some grave mistakes because they don't understand recession. They don't understand depression. They don't understand inflation. They don't understand stagflation, right? They don't understand boom and bust cycles, right? When there's a time for the market from even cyclical values of car buying, house buying, when interest rates are at a certain point, the sweet spot, you'll be like, nope, right now it's the very best time to buy a house if you got paper to do it. Right now, trust me, because interest rates are here, blah, 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 blah. They're giving, the credit market is open because the spreads are, you'll be able to explain all that juices of the average people. They be like, man, how you know all this stuff, bro? You were right, bro. I got my rate locked in. All the people that refied again at the end of 2020, when it was so bad, the refinance company were doing what? They were just out there bidding away, giving away interest rate. Like they were paying for people, closing costs, everything. They wanted business that bad. Boy, we didn't hesitate, but refied on the property so fast, like what? We get locked in, what? But we didn't think twice. Now, people ain't, prime rate is at 4.75. That means banks charging 5.8 right now for interest rate on a 30-year mortgage. It was literally 2.1, 2.2, 1.8, 1.9 about a year and 7-8 months ago. It was sitting around those levels. Now it's all the way up at a 5.7, 5.8 right now for a 30-year fix. That's short of the time frame. That rarely happens inside of a market that's an economic cycle that's organic. It has been something that caused that pendulum swing that far, that fast. See, that's the part about the game where they're not going to be telling you that. Your banks are even supposed to be educating you and stuff. They don't. Sorry. Them people ain't saying nothing to us, right? So it's crazy. So look, where else you going to go get your information from? Like you ain't got too many places that you can go to. You thinking the professionals are supposed to trust them, but you find out ultimately in the end, these people out for business, and whatever, but hey, it's up to us, right? It is up to us. But I'm excited because I love this stuff. And look, I'm a sponge. We all sponges at this. We're trying to get better. That's all I can say. We're trying to get better, right? And I think at this point, it's nothing stopping you. None of us, but us, right? We've already opened up the can of worms. It's already shown that we have a value here. We're hungry for it. We see the opportunity here. Some of you guys in turn some awesome trades already. You already know. Because the first thing you tell yourself when you have your first biggest trade, like imagine if I get a chance to double that, triple that, right? That's when you like, man, bro, look, I'm all in at this point. You like, man, they ain't finna get me away from this. They ain't finna They can't stop me, right? They cannot stop you here, right? They can stop you in other places, but they can't stop y'all here. Just imagine that if your boss fire you tomorrow, unfortunately, or like, hope that never happened, Woosah, whatever, if you all working, you can be like, okay, you just did me a favor. Now, it may hurt you early on, Corey, but if you get more time to kind of really saturate yourself in this and you really get, you can devote more time to it, it won't really, take you off your game. You can always find another job, right? But you still got something that can help you, at least to a degree, help sustain you, right? Depends where you are in that, but you're not, just completely, up the creek out of powder. You still got a skill set that, that produce income, right? So it's just the way you look at it, right? It's just going to force you to get serious about your resolve and learning how to be very proficient at this. That's all it does. It's a necessity, right? It's supply and demand, self-preservation, right? As one would say, right? But that's it, guys. Look, let me go eat. I got to go eat, man. It's been a long day. But y'all know what it is. Tomorrow, going into next week, we got a short week next week. We got triple witching tomorrow. It's been a wild week, guys. What can I say, right? A lot to be made from this in terms of the sectors, and again, it ain't hard again to go track a lot of this stuff. Where we at really quick, just the spiders, right? The typical scenario going to the spiders, selective index value in itself to kind of see what's going on here. And keeping up with the broad market. Look here, this is your spiders today. Right? All I'm saying right there, boy, bro, I don't even know what color that is right there. That's pastel, pink, red, orange, everything mixed in one there. I don't know what's going on here. But yeah, I'm just saying, if everything was all hunky-dory, this shouldn't be looking like this, right? How is finances, the financial sector looking like this too? And they raise the interest rate. Like I told you before, it's still too early. They know the Feds are BSing. You doing quarter basis point and 50 basis point to fight 16% inflation. Financial markets can't make no money on that. And the dollar power, already stripped and diluted. So they're taking a beating too. They're supposed to be hedging right now against everybody. And they red too, like everybody else. So this is your market that's broken. It's broken, right? It's broken. And this is how you're going to convince other people to be buying this market right now, just because no. It just ain't time yet. It's just from my perspective, ain't time yet. Right? It's not there yet. But anyway, that's it, guys. I'm out of here. There's your future market night. Again, they're gonna try to rally. Again, China must be open. All right. It is, as I said. See right there? Remember I said if the Hang Seng open up after having such a bad day, the pendulum got to swing back to the other side, because they were like somewhat in oversold condition, and some of their numbers too, where Hang Seng is right now, up 400 points right now. 400. After been down 600 some odd yesterday. Y'all see this right here? China 8 shares, 100 points. The CSI 300, it ain't open yet quite for them. China A50 though, right there, open up right here, 240 points. So if any of them numbers right there potentially hold, because they still got to get through the rest of the night too, and they got to get through the London session, all that stuff as well. But if it holds, right, because China has a propensity to jump up big like this and then sell off again, right? They very fickle over there. But if it holds, it'll carry a little bit more weight into in our little parasitic markets, right? I got to say that, right? We piggyback off a lot of people and even talk trash about them in the same, bro. But right now we up 368 plus. This on the futures, of course. So that's easy up near that 368, and change as of our natural SPY, possible potential even 369 once we get cracking. And then it could easily gap up, about 2-3 points. That'll put us already near that 369, 370 potentially. Again, I gotta say potentially. So that's why that 370 call value volume is playing into that. The market makers are trying to play into all that premium potentially, because we've already kind of exacerbated the downside. That's all they're doing. They're just using the value to kind of pare back some all that put premium. They don't want to pay out all them puts tomorrow. You see how that works? They do not want to pay out all those puts tomorrow that are just so deep in the money it's not even funny at this point. They don't want to pay those guys all that premium. So if anything, if they can lessen the blow of that a little bit, they'll try to play back towards that 368, 369, 370. They'll try. We'll see. It's still up for debate, but that's what it looks like as of tonight. So right now, my little 370 calls, they might be winning, might, maybe, right? But it was a strategy of mine to cause that, which we discussed here tonight. Right. So that's it. So I'm out, guys. Again, hope y'all enjoyed tonight. It's been a long, long day. Appreciate everybody, each and every one of y'all, as always. Over Sonny, over Rich, over Brandon, Miss Angela Monroe in the building, over Jeremy, over Chris, Miss Monica Leon that was in earlier, Brother Dondre that was in earlier, everybody on the YouTube side of things. Of course, sorry I wasn't able to kind of really speak to the YouTube family today. Y'all know Thursdays I get it sessions, right? So if you follow along over there on the YouTube side of things, we appreciate you guys as well. Brother Everything, Miss Monica was over there as well. Over Ramsey, he was over there too, right? Anybody may have been watching and listening in. Appreciate you too. These are for archive sessions, of course, on the YouTube, but the panel members are definitely people who are active in this. So shout out to you all. And that's it, guys. We'll be at this thing again tomorrow. Hope that again, if I get lucky to get.
Appreciate you.
Go ahead. Go ahead, Rick.
Thank you, Obi. Appreciate you.
Oh, appreciate you over, Jeremy. Anytime. I heard you say you was on the clock. So yeah, you guys that time wisely, bro. That's what I'm talking about. Hey, that's what I'm talking about. You get paid twice, right? They don't understand.
Yeah, they don't teach them about the market. They don't get it up here.
Man, you know how it is. That's why you got to be that what? You got to be the pastor up there. You're Pastor Lewis. Like, come in the building. Let me teach y'all about some financial literacy today. Somebody go get saved today, right?
Yeah.
Don't you buy that $100 out that vending machine. Don't you buy that $100. You could have bought this stock right here, bro. You could have put that on this stock and made a ton of money. You buy that $100. You don't need them 3,000 calories anyway. And it's weird too because look at him. Y'all know that y'all probably saw it today. That little stock ADN. Did y'all see that one break out today? By any chance on the way out the door here?
Nah,
that little stock right there, boy. Look at him. I hit it. I ain't even get a chance to even post on it. But that little joker right here. Boy, here. Look at him.
Wow.
And this one here, guys, it had options.
Oh wow.
It got options.
Was that on the buck scanner?
Yeah, it came up. Yep. This one on Webull too. It came up on both.
Okay.
Pre-market, it was ripping, right? Or early on, it was ripping.
I seen it on the top gainer.
Yeah, and then it opened up. It opened up around about what did it open up? It opened up a little bit over what $2 and some change, or in the $3 actually. Yeah, it opened up around about $3 and change, and it chopped. Went up kind of went up like it always do, spaz up. In that first little. Whatever 339 pullback, it chopped, held support, and then it went on and made a new high, right? But it had option, guys. At that point, around about $293, the option, they had the 250 strike call. Them calls were only like what? I want to say like 30 or 40 cents a piece at that time. And then by the time it ramped and went up here like $4 and change, man, them calls exploded. They were like dirt cheap. A little old dollar stock that had option that ran lifted from a $1.16 all the way up to what $4.41. That's over 400. What 400+% day now, or 300+, whatever. You couldn't make this stuff up, and it had options. That's why I keep reiterating. It had options, and it was dirt cheap.
That was a good move.
Yeah, so I bought the comments. And it's weird too because at the time when I was getting ready to load up on some more options, I was just scrambling like I always with other stuff with them. When little spot put, I was just, trying to, make sure I locked in all that good money over there. But I did buy the comments. I bought some of the comments, and pre-market. I got in at what 210, and then I bought some around like 230, 240. So around there, I had an average around about $2.28, and then I bought a little bit more when we got up above that 280 area, and it'll start showing a little support around there, and that brought my average up to around about like 240. Right. And so of course after that, it just ripped throughout, the back end of the day, so interesting, but it's just kind of throwing it out there on the way out the door. So we'll see what it do tomorrow on GP, but it had news, whatever. And again, we're just beating down, downtrodden, one of them tight little stocks, right? If you look at the stock course, where it came from, it had kind of hit its, proverbial bottom, right? That's
crazy.
As one would say. And then it was just, left for dead, right? Left for dead. But, that's why I say just being in this in this, you guys will find these little plays when you utilize your stuff properly.
No, I don't think it's tattoo. Maybe a haircut.
Oh yeah, or Brother Rich. Okay.
Yeah.
Yep. You might Brother Rich. Yep. Brother Rich. Oh, he might be good. I think. Yeah.
Oh, hey, Oba,
but yeah. So
what do you think about ARC for 2023? What do you think about that?
Who that? I'm sorry, name. The ARC.
What do you think about? Yeah.
For 2023, like anything, it's tied to the tech sector. For the most part, majority of her assets, all the different funds, even though they separate, you got healthcare, all that stuff too, genomics, all that. But for the most part, most people follow the K one, right? The innovation, right? The innovation one is tied to tech. So if you play it in the same level of the correlation to that of the QQQs, same way we talked about Bitcoin doing that, you'll be able to kind of still determine, in essence, in aggregate, because a lot of that stuff that's in that innovation fund are the stuff that's overvalued, stuff that's getting taken to the woodshed right now, whether or not it's valuable or not. Make sense? If they ain't getting their stuff together and the 10 years kicking them in the behind, the interest rates are kicking them in the behind, and if it's a slow process for them to get some footing underneath themselves to produce organic growth, then that's going to reflect in that ARK-K innovation ETF the same way. So whether you say, well, if 2023 may be the year rebound, then ask yourself the same question I asked y'all earlier. Do you think a lot of the macroeconomic scenarios that we're dealing with, if all that stuff going to be cleared up by then, and it won't be necessarily affecting a lot of those stocks like that, then, it may be game on. If not, you'll be planted with the same energy that until that, that cake is ready or that fruit is red on the tree, it ain't ripe yet. Right? It's going to have to prove itself to you more so than you feeling like, I'm just going to go ahead and speed up your growth process, right? Your ripening process. No, we want to let the market prove itself to us at this point. So when the market get to this point here where it can't control the shots or call the shots, this is the best time to be a potential buyer, because you got all the time in the world now, right? You if you're not crazily like a lot of people who underwater, who was buying at these exorbitant, crazy high price, and they use up a lot of their good working capital, and now they have to play the game of bag holding to get bailed out. See, that's like playing, you don't have much leverage at that point. A lot of us, even though we got long positions out there too, but again, speaking for myself and many others, I know some of you guys were very critical in your positions too, but we wasn't buying out them areas. We were buying strategically. Think about it. We were buying Moderna around $30 and $40 and $50 and $60 a share, and we rolled it up to 400 plus. Think about that. Well deep into the money. That's strategic. We were buying Tesla, before the pre-split, 400, 300. My initial average in Tesla when I really got hit the Tesla was like $232. I remember like yesterday. I got in at 232 before the real split, that first big split. I wrote it all the way up, up until y'all know where it went before the real split. Just let that marinate, and I only added strategically in those inclement moments. So it's the same thing again, given the fact that you guys get a chance now to be a part of this next reset. Now, we don't know if it's going to happen right away. A lot of people, they trying to rush it into existence because they got spoiled because of COVID in 2020. I just say, no, this is the best time to let it work itself out all its weak hands organically. Don't rush it. Let it get really, season well, and then, make your move. Now you're just building skills to accommodate it when it happens. Once that happens, it's going to be game over. It's going to be game over. Because y'all know they want it too. They just premature with it as always. They greedy, right? But no, bro, you ain't finna convince me this market is ready for, that kind of level of risk on. And the market is now starting to say, bro, we finna go, on a nice little vacation, down south. Right? You got too much problems with the markets, and global markets as a whole right now to be talking about some everything in the all clear, all this priced in goofiness, and I'm like, bro, I don't know where y'all see that at, but good luck. So we're just being prudent. That's all it is. We're being prudent. That's gonna serve us well, right? Yeah, I would love to buy Netflix even though it ain't probably the top one on the block no more, people still trying to say it's the king. I don't know y'all gonna sell that to that. I don't believe it's the king any longer. They still got some good stuff that they show every now and then, but bro, you can't make that kind of assertion when when your whole book's been what turned upside on his head right now. Right? You want to really start doing some different business modeling, right? Owning maybe some video game like it was should have done maybe during the summer 2021. They were just sitting on that money, still doing the goofy stuff and trying to spend high dollar for movies with A-list actors instead of trying to do some mergers and acquisitions to build out their business model and their portfolio. They chose not to do that and to go more deeper into debt just to be a pure player on video streaming. Ain't that the dumbest thing ever? And they were sitting at $700 share with all that share equity power. They could have been diluting the shares, raising capital, and they still had decent cash flow at that time. They could have been, buying up people like Activision, Blizzard before Microsoft bought them. Like they could have bought EA Sports. They could have bought some of the e-commerce gaming people. They could have bought the ones who were private. They could have bought Twitch. Twitch ain't even IPO. They could have bought Twitch, all internet stuff like that. And they chose not to.
They could have bought some of their competition too.
Yeah.
Because they had a chance
Hulu,
to get HBO Max. Yeah, they
could have got Roku dirt cheap. HBO Max dirt cheap. They could have got all that stuff dirt cheap. They chose not. So guess what? They did. They have what they call the proverbial boomerang dagger. They're feeling it right now in the back of the head. So yeah, let it come down even more and more. I ain't touching. All the people start saying, man, Facebook is bad. Facebook is cheap. Facebook is dirt cheap, bro. It's at 200 again. It's dirt cheap. Crying all over the internet and on live TV, and some of these guys, they just so greedy and gluttonous and irresponsible with that stuff. Oh man, this is a buy here. You gotta buy Facebook. It's at 200. See all that dumb stuff trying to save the company and think they saving the market just because of a name brand alone. Like, dude already told you that he garbage. He was already doing unethical stuff with the business model. Okay, say what you want to say. Yeah, but they got cash. Okay, but if that cash is starting to fleet because everything about the business model is starting to even have its value of peak, and they got to find other ways to monetize the whole value of the user base with the ad revenue is at the third, and it's still cyclical when it comes to that because they only beholden to how everybody else is operating and doing business where they can afford the ads. That's what's hurting them now, of course, right? So they tried to reinvent themselves because all the bad press they got, right? All this, Cambridge, all the other stuff, based on all the scandals, income the metaverse stuff, right? They bought Oculus, right? So they're gonna transfer themselves into a VR company all of a sudden, right? We meta this, but we know that stuff is too soon, right? And that's where everybody was at, given what we just come out of. And again, it still had a mountain of R&D and everything else even to build out that whole platform, literally like a new company from the ground up. So yeah, then they come out and tell the truth finally. Man, look, we waste a lot of money a little too soon on our preparation for this. And yeah, it may not look to be operational or realistic between I think they said 2024, 2025 for the metaverse. Who finna be buying Facebook at 250, 300 right now, all that stuff, and they talking about that stuff ain't gonna be ready for another 3, 4, 5 years. I'm just asking for a friend. Somebody help me out there. I mean, not that they can't bounce and run around those areas and play around that areas, but we still talking about the broader market, right? We still talking about QQQs, right? We still talking about raising interest rates, right? The antithesis to the tech sector is rising interest rates. That's kryptonite to the tech sector. Until that stuff stabilized, real rates began to kind of normalize. You in the That's why I asked y'all, what inning we in? We're in the first inning, second inning, third inning, fourth, fifth, where we at? Because if you make the case we're on the back nine or the back of that nine, then yeah, okay, Facebook is possibly getting ready to look like a buy. Then I say, well, me personally, I don't see it. Me personally. Again, I'll just say this in closing, on the way out the door. We've been right thus far. Have we not been? I'm just asking. Y'all can disagree. I'm fine. Have we not been right thus far for the most part? all the way
Yeah.
down. Have we not been dang
Definitely.
near spot on with our call? Right, we
Basically.
trade indiscriminately inside of that. You know, sometimes we get mashed up. You know, the market's still crazy, but on a bigger macro, we've been pretty much spot on with our call with this marketplace. While a lot of people telling us, man, ain't no way, ain't no man market, man, it's cheap, man. You crazy, bro. I'm buying here. I'm buying Netflix 350, boy. You don't know what you're talking about, bro. I'm buying Facebook 350, boy. You crazy, boy. Oh man, I heard some of the wildest stuff at this time. I was like, God, boy, I'm definitely adding Tesla here at 1100. I don't know what you talking about, bro. I'm selling some of mine, bro. That's what I was telling them. I'm selling some. I'm buying here, bro. I was like, oof, good luck. You know what I'm saying? So, hey, different stroke, different folk. That's up to them for their risk value, their risk assessment. No harm, no foul. I can tell a person how to spend their money, and I'm definitely not going to pocket watch them. But I will say this: strategically, from what we do, it's our responsibility to be just as well responsible to other people's eardrums as possible, because you can't just go out there like that. You can, but look, you know, hey, y'all know what it's like out there.
Yeah.
Y'all know what the kind of world it is out there right now. A lot of them jokers ain't gonna be around another year or two.
Ain't sure ain't.
Think about that. You know,
Don't wither away.
Boy, you talking about like a raisin. Well, look, I'm just saying, all this stuff again. Just I always say, keep it close out on the AMC 8s every now and then. They had a shareholder meeting and all this stuff, and they mad at the CEO. Boy, the apes are furious right now with the CEO. It was all good just a week ago, though, wasn't it?
Yeah, they mad at the CEO, but couldn't tell that this is basically a dead company, a broke company.
They put all that trust in that man, and they was advising him to make these dumb investments and stuff like buying a gold mining company. And, I guess, you know, a more premium popcorn out. All right, look, let me go, man. I'll be here another. Hey, thank y'all, beautiful black people. Thank y'all, beautiful everybody. Thank everybody. Look, I see y'all tomorrow. Right.
Oh yeah, real quick. I know Royal Caribbean is trying to get Starlink for the cruises.
Yep.
I did see some news about that. So
yep. Keep your eye on that. And of course, that's a scenario where you say, you know, if that scenario was to come into play, that opens up the door of potential for Caribbean and all of them, right? You know, in that totality aspect. But again, like we know, the Caribbean market still got to get through all this churn of recession and tight money, even with that stuff being cheap, right? Because they got to fill those seats, right? Yeah. Pay for a lot of that stuff, and it's in that same swing, right? And this is supposed to be their peak season, right? Of travel, right? Summertime, right? Yep. But jokers like, bro, we're gonna cruise in the backyard this week, right in that little ditch behind the house. Look at little Jimmy, go get that
going to the creek,
your boat right now. We're gonna be in the ditch in the backyard.
Going back to the creek, huh?
Right. Talking about getting half of that slip and slide.
Right in that little creek in the backyard, boy. Like, look at where we going? Right in the backyard. God, dog. Woo, but yeah, it's tough out here right now. Daddy can't. You look at it. So I'm just saying. So even that, even that market still got to prove itself. So, but interesting. Matter of fact, yeah, I know I said got to go, and I gotta go. Right. But yeah, I did this the other day with I had a session with the individual the other day too, and we was talking about this. They actually got this one in their portfolio, and we was like, yeah, I was kind of breaking down the idea of what that looks like. I said, you know what, we already down at 9, right? We got a gap down, that we got a field down here. I said, what's the odds we going to close that gap? And I was explaining to them how this works when we get close to that area. That this is the peak season for the ideal of what buying cruises and whatnot. And it's still it's dumping, right? Like where are those people at, right? So you see right here, I'm finna do this real quick right here. See that little dot right there on my screen and that little note right there, right? Y'all see it right here?
Oh, you still showing
you gotta make that shot.
The ADN.
It's not. Oh, I forgot. Yep. Yeah. I'm on the. Yep. I forgot. I'm on the little tight chart. Right here on the way out the door. Carnival Cruise Line. See that little. Let me go all the way back out there so y'all see what I'm talking about here. Y'all see it right here? This is where we are today. This is how we mapped out where we were. Keep in mind, this is the COVID lows, guys. I want y'all to know this right now. Exhibit A. This is Carnival Cruise Lines, the COVID lows. $8. Where's Carnival Cruise Line right now in terms of price? $8.75. Y'all see that little circle right there? I put on the screen right there when I was working with the little, that little bill with that particular session. Here's our gap fill. It had a gap down there, 875. To the T. You see right there? It hit it to the T today. I ain't making this up. Y'all see that right there? Let me blow it up. Don't joke with me. Look, they ain't gonna be coming for us. Look right there. To the T. It closed right at that gap fill. And at that time, it was at 970. I say, we going down to close that gap. We just close now. Here's the probability. What does this look like? We looked at the options. The 950s and the $9 strike. I said, we're going down to hit that gap fill really soon. Especially we have broader market weakness. We're going to hit it. And we are already at the COVID low. So guess what? Outside of that, you only got another 75 cents before you hit straight burial ground. Ain't that something? 100% round trip ticket on a real cruise ship, right? From $8 Carnival Cruise Line, in this case, right? The cruises, whatever you want to call all of them, ran, topped out, right? They hit, their little peak, right? They peaked and crested up here, $31. Now they all the way back, 100% round trip ticket. That happened during April, March of last year. We already, of course, below that now. And there's no true reason why this just automatically should just rebound just because. Again, show me how they fill in the seats. We'll be able to track that by what that looked like for revenue. Right. So I was like, you might want to, think about this position, because this was a long-term holding. And that's fine because we all, got positions out there. Someone might just be a little bit underwater from the whole situation. But again, as we say, entry is everything. Now you coming back down to the proverbial low of this particular stop, right? Last time Carnival Cruise Line was at this price, never, never ever, right? Never ever. What do you call it? Never ever. What dang near seem like? Dang near, ain't it? Look at it. Here we go. Way back here in 1995. What was y'all doing in 1995? But you're like, boy, I wasn't even around during that time. Boy, what you talking about, boy? Watch out. Carnival Cruise Line haven't been this cheap since 1996.
That's tough.
Ain't that something? And all this so-called value, what they call standard of living, where people supposed to have got more money, got all this, that, and third, they can afford to do this. You mean to tell me the cruise line couldn't find a way to reinvent themselves, whatever. Now he had his payday moment, right? It went, it went to the promised land in 2018, right? But after that, this is a straight down. Look at this, is straight down. So this is pre-COVID. Y'all see this here, right?
It's cool outside.
Is it not? This is pre-COVID. So they was already on the downturn, before COVID hit. What's wrong with their business model? Sounds like a Netflix to me, dang, that they need to reinvent themselves or something. I'm just saying. So whatever, y'all get it. But $8 maybe, you may get your little proverbial balance there because it's at the flow. At that point of it, maybe not, but we definitely close that gap. And right there, I got a little note right there. Gap fill for CCL. We mapped that little trade out and went right down there and closed the gap.
NBA.
Right?
Just got a baby looking face.
I love this stuff, man. So that's it. So I'm gonna get out of here, get out y'all hair, right? I think over getting in with the family. I hear him over there too, right? Shout out to him and his family. Shout out to you all and you guys' family as well.
Appreciate you.
Appreciate you all, man. Y'all enjoy the rest of your evening. We'll be at this thing first thing tomorrow. Again, don't hesitate to help one another. Participate where you can. Get out there, test yourself, right? Test yourself up against this stuff, man. Paper trade it. Get comfortable in the regimen of doing that stuff, man. It's only going to improve your skill set. Trust me on that, right? So we'll be back at this thing next time, next week, and we'll see what's going to go down because it's getting ripe out there. All right, so I'll see y'all in the next one, guys. Peace, power, profit. Hitting up y'all. Peace, man. Anything on the back side of things, email, whatever. And we'll see you guys back in the rooms.
All right, peace over. Thank you.
All right.
Thank you, guys.
Appreciate you.
Peace, everybody.
All you guys.
All right.
Anytime, family. Peace, everybody.